Let's talk about today's live stream sponsor, ProfitX. ProfitX allows traders to get up to 1.2 million in simulated capital for their trading. But on this simulated trading capital, you get an 80% profit share of the simulated profits. That's real money on simulated accounts. They also offer unlimited trading days to their traders, so there's no kind of number of trades you can or can't place during the duration of your challenge. They also allow their traders to trade 800 plus assets, so you can pretty much trade anything with this one prop firm. When we look into sponsors for this show, we do also make sure that the team behind the scenes seems as professional as possible. This is a big team, not a kind of influencer or solo run ship. This is a professional team running ProfitX, so I want to encourage you, check them out, do your own due diligence, and see if this is the right firm for you. Now back to the stream.
All right, guys, good morning, good afternoon, wherever you are in the world. Thank you for being here for today's really big live stream. And I'm glad that you're going to be spending it here with us on the A1 Trading Show. We've got a good lineup for you, getting ready for the NFP report. I've got a lot to do here with just about 15 minutes time. We are going to run through as much as we can with anticipation of the jobs number that is going to be dropping in 15 minutes. All I ask as we get started, help me out, hit the thumbs up button on the live stream. It helps to share the stream with more traders so that we can get some more people in here. I'd really appreciate it if you could do that for me. Thank you so much. Let's jump into some charts. First of all, oil's up 3%. I'm not actually sure why. I haven't really looked at this. Winter weather concerns push oil futures higher. Oil jumps more than 3% trade as reports of new U.S. sanctions on Russian oil. That's more likely to be it, in my opinion. U.S. sanctions, any supply issues typically do cause spikes in the price of oil. We've got oil at 76.75, and this is big for a lot of markets. Rising oil prices can cause rising prices in general, aka inflation. And what also could increase inflation would be too hot of a jobs data print this morning. So I want to just talk about where we are with the labor market. The labor market is quite strong relative to where people thought it was going to be. Inflation has been pretty sticky in the United States. If we take a look at CPI year over year, you can see it fell, it went sideways, fell a little bit, and now the question is CPI truly back on the rise? Is inflation coming back into the U.S. Economy? You know, here is a look at core PCE. We saw, prices falling. This is the Fed's preferred measurement of inflation. They call it core PCE. So when we talk about this number flatlining, right, the problem with that is look at core PCE and you're looking at 2.8, percent. That's not the 2% target that the Fed has been adamantly pursuing in their rate hike and rate, restrictive policy process. Their goal has been to get inflation down to 2%. If that goal actually starting to round out, bottom out, and start uptrend on inflation, we are going to see a really rocky 2025, because then it's back to, okay, we need to actually keep restrictive policy there for longer. Now, what does this mean for you as an active trader? Well, whether you know it or not, it means everything, because that's what's going to create new trends or sustain certain trends in the financial markets. So how does labor data play into all of this story today? Well, we see certain markets like gold, for example, kind of held down by this recent really strong dollar. The really strong dollar concept is problematic for a lot of other markets, meaning if the dollar keeps going up on rising inflation and super strong economic readings, that is going to pose issues for other areas of the market. And it's going to pose issues for the Fed, right? That's why it would cause issues for other places. If the dollar keeps going up on just red hot US economic data and or inflation data that is rising, what that means for you and I is that gold, of course, when priced in dollars, is going to be a little bit suppressed, could stay sideways or even potentially form a downtrend if the dollar keeps breaking out. But also it means, yields are going to continue to be a problem, right? If the US 10-year yield continues to move higher, the Fed's going to have to say, okay, look, we can't cut rates this year if we can't get this economy to chill out a little bit because inflation is going to go crazy, right? So there's all this, it's all this antics that go into this. So when we discuss today's jobs report, what do we actually want to see? Well, there's a couple things that I'm going to tell you that I'm looking at closest within the jobs report. And again, inflation is a really key component. I want to actually look at wage growth, right? So wage growth year over year is, of course, like an average kind of aggregate. How much are people getting raises, right? Like you want people to get raises, but you don't want people to get, crazy raises, because what happens then is inflation goes crazy. The prices everywhere go up. If everybody gets paid more, if the labor market is real strong, what happens is everybody gets paid more, they go buy more things, and prices start to prices start to get out of control concept again. So we don't necessarily want to see like an incredibly hot jobs report today. We want to see a lukewarm kind of Goldilocks, if you will, jobs report, which in my view would mean wages kind of stay at a 4% range, but don't start rising too aggressively. We don't necessarily want to see unemployment rate dramatically rise, but if it's kind of not moving too far from where it is, that's also okay. And then when it comes to jobs numbers added, right, I think we're forecasting like 155K today. You don't want to see a 215K number. That would be really strong hiring, which would suggest that inflation could continue to rise, right? So jobs and wages are a huge component of how inflation factors into the full picture. We take a look at some markets here with just 8 minutes to go. S&P 500 is still sitting tight at that support level right around the 58 to 5,900 level, right? So we've seen prices come down into this zone a couple different times. Each time they make that retracement into that area, support is coming into these markets or into the indices across the board, right? You've got the same kind of picture going on for the NASDAQ, right? NASDAQ kind of holding that support level. I do have a long position on this. I'm in the camp here that we could see a continued strong economic data points out of the United States, which is not necessarily bad. What would only be bad about that would be if you get a ramp up in inflation alongside that could cause some concern, because then the Fed may need to even discuss rate hikes, right? What we really want to see for the soft landing effect is growth to stay strong, jobs, numbers to be decently healthy, but inflation to cool off. One thing that throws a wrench into that story today, guys, is oil's up 3%. I mean, I'm actually kind of bummed because I almost took this entry and we've ripped here on oil, but really good signals on oil we've been getting the last few weeks on this. You can see US oil is the #1 pick on the Edge Finder right now. It has been for the last few weeks, and it's been an incredible thing. And actually institutional money has been accumulating oil. We discussed that on the channel. So if we go and we take a look, for example, at COT data history, check this out. Institutional money is heavily long oil. So really interesting to see that as we go into, this giant uptick move. Big money has already kind of been piling into that trade. And then we've got the breakout right around that 73 level. So really big stuff happening on the oil price. Again, oil price is going up, not necessarily the end of the world, but if you do start breaking up into the 80s, that starts talking about inflation again, right? If you get the 10-year breaking out, you get the oil market breaking out to the upside. Those are signals of sustained inflation, which could be problematic. Crypto's having a little bit of a bounce back, big sell-off here in the last few days. Take a look at gold here, up 0.33%. Silver, I've got a couple, silver also slightly up. Copper, seems like commodities in general doing okay today. Meanwhile, stocks are about flat, probably just waiting for the release of that economic data. Dollar index slightly off of its highs, but really not too much of a move on the dollar side at this time. For me with this report today, it is pretty much all eyes on the dollar, right? Because if you get a really hot print, this dollar index most likely heads up to 110 in my view. Like if you get like a really solid jobs report, high jobs added, unemployment rate stays where it's at, and wage growth is strong, that US economy is looking real hot and the dollar could continue higher. If any of that falters, there's some high expectations on the dollar right now to deliver. So you could very quickly see a move back to 108, 107.5. Now, again, you might be saying, well, Nick, you're not telling me which way it's going. And the answer is I don't know what the jobs report is going to tell us, right? I'm going to trade the aftermath. And that's how I always treat NFP reports. We don't trade 30 seconds before, fingers crossed, one eye open, one eye shut, YOLOing a prop firm. That's not what we do around here, right? We discuss the actual economic data, what it means, and what trends could come out of the data, right? So we're looking bigger picture, trend following the economic data and what it truly means for markets. So we're gonna every time we do these events, right, we got 1,082 people watching between all the different streaming places that we're on. But what happens every single month is for these events, everybody kind of piles in, and then there's a huge exodus of people right after the numbers released. Don't be one of them. Stick around for a few minutes. We'll discuss what the NFP report actually tells us about markets and whether or not it could sustain the dollar trend to the upside or cause some reversals. We'll discuss all of that and what it could mean for other currency pairs, what it could mean for crypto, what it could mean for stocks. All I ask is if you're enjoying the stream, smash that thumbs up button. Definitely helps just to support what we've got here. Guys, we've got just under 4 minutes here before the release of that data. Let's go ahead and just have that at the ready. Forex Factory is all we're going to need for this, just because it gives us the core pieces of information. So we got 3 minutes to go here. Average hourly earnings, added jobs, and of course, the unemployment rate. Yeah, if you guys could do me a huge favor, smash the thumbs up button just to get the word out on this stream. I'd really appreciate it. We also do have, of course, for those currency traders trading the CAD pairs, CAD employment data will also be dropping. So with the countdown here, again, we are going to take a closer look at this. Once the data comes out, what I'll do is I'm going to go ahead and switch over to our all markets view. What this will do for you is on the screen, if you take a look here, you'll see all of the different markets that most of us are watching here. We've got S&P 500, NASDAQ, Dow Jones, Russell. Meanwhile, you've got the dollar here, gold here, Bitcoin, and oil. So a little bit of everything on the screen just for your convenience to see the reaction to everything. All of these markets are likely to move. To the degree that they move is to be determined. How surprising is the number? That's the real question as to how far these things are going to move in what direction. So for stocks, it's a bit harder, right? The question about stocks. Do stocks want good jobs data? Well, they do, but they don't want it to be too good, because if jobs data is too good today, if the economy is ramping again, you might think that's great for stocks, and it kind of is, but too hot economic data could lead to inflation. Too much inflation could mean the Fed is going to take their foot off the gas with rate cuts and instead look to pump the brakes. So that could be actually a negative thing. So we want good jobs data. We don't want exceptional jobs data. Exceptional jobs data today is likely a negative catalyst for stocks, in my personal view. We'll put that to the test if we get some crazy jobs number in the next 1 minute and 15 seconds. So yeah, if you are you're lagging, Nick. Sorry if I am not having the best internet connection. Again, I am working with what I've got here. Let me know in the chat if I'm too laggy, and I'll try and switch to a hotspot that might be better. But I'm still moving into the new place, so internet is still kind of a rocky thing. And I live out in the country now, so kind of. So it's a little bit. We don't have a fiber line, which kind of stinks, but hopefully it makes its way towards us at some point. So yeah, I've got some long positions on risk assets, so I'd prefer things to go up today, but if they don't, it's not the end of the world. I've got stop losses in place, and I'm managing a small amount. So we got about 30 seconds here to go, guys. Don't go anywhere after the spike. We're going to discuss it all coming right in after this breaking news. All right, let's see what we got. NFP numbers should drop in about 10 seconds or so. We'll react to that as it comes out, see if it causes any volatility this month. Okay, jobs numbers seem to have just dropped. We've got S&P down, dollar up, right? So this is going to suggest possibly some strong jobs data prints. Also why gold would be down here. Dow Jones, Russell, Nas, S&P. That would suggest that you had a good jobs print. That's my guess. Yep, there it is. There it is, guys. Oh my goodness. 256,000 jobs added compared to 164,000 expected. That is a major uptick in economic jobs data for the US. And again, like I was saying, that's good jobs data, but is it good for the stock market? There you've got some issues because again, if you're talking stocks for a second, now obviously dollar is flying, gold is going to drop on that data, right? The natural reaction here from stocks is, oh no, no more rate cuts, right? If rate cuts are drying up, stock market's going to not love that, right? That's what we were discussing right before the drop of that data. Again, really, let's actually see what kind of damage is that on the stock market. Yeah, I mean, Nas is down 0.7% here. S&P's down 0.6. Bitcoin up 1% on the day, but was up like 2.5. So giving back some gains on that front. You've got gold here down, went from green to red on the day. Same thing with silver, Bitcoin, and we've definitely got some trades to take off of this. I'm going to be looking at a lot of different stuff here today. Let's see what else we've got. So again, gold, silver, back to in the red today. Bitcoin's up 1.3. Dollar index up 0.42%. Again, dollar is ripping off of that. Let's see if it can hold those gains. I mean, that is a huge print, though. And pretty much across the board, a hot jobs read for the dollar. Unemployment rate came down to 4.1%. That is strong for USD. NFP report came in higher than expected by 100K. They revised the previous number down from 227K down to 212. Still not a huge number. Really, we've got a net big, strong jobs gain. And again, that is dollar bullish. We said that just before. That makes just good sense, right? If the labor data is coming in solid, then that kind of acts to support the recent rally that we've had in the dollar index and perhaps could take us to new heights. If you're taking a look at currency pairs with this, right, you've got euro dollar selling off, pound dollar taking out those lows once more. The Kiwi dollar, dollar CAD, right back towards those highs. Australian dollar taking out the lows. Look at the Australian dollar against the dollar. My goodness. Dollar yen here breaking out to 158.7 here this morning. Again, you've got stocks in the red in response to this. S&P 500. Watch this close, guys. I mean, I like the S&P on the long side. Don't get me wrong. But if this can't hold support, then likely we go back and test this area in my view. So if you get a really solid red close today, it's going to be a signal for me to go ahead and stop out of some things and look for, again, lower prices on the indices, because this is going to be problematic to the Fed story. Let's go take a look at yields. And there they go, guys. Look at the 10 and 2-year yield. The 10-year breakout seems to be in. Yeah, I mean, that's somewhat problematic. With that breakout, depending on how this closes today, guys, if this closes like this, it would suggest that the dollar should continue, yields are rising, and interest rates are likely going to get swept off the table a little bit more. So, you've got some big stuff happening with this report. Nas down 1%, S&P down 0.75, Russell's down 1.7. Obviously, Russell hating this scenario. This is not good for small cap stocks. And meanwhile, you've got oil ripping here to fresh highs around the 77 mark. Makes good sense, right? Strong economic prints are going to increase demand for oil. Oil continues to be a great signal from the edge finder. So, we saw that in the top setups page here. By the way, let's see, I closed out for a profit on my dollar Swiss trade. So that move has been awesome. I was long on this one. Shared this inside of the group here just the other day. Let me see if I can just pull that up really quick. So Yeah, we've been trading a lot of dollar crosses to the long side. Here's Chris's trades. He was trading dollar CAD, I know, to the upside, still in some of those positions. And then I was trading dollar Swiss franc on the long side. Closed for 113 pips yesterday. I decided I didn't want to hold it into NFP. Obviously, with hindsight, I should have, but still closed out a really nice pip profit, 113 pips yesterday on that. And I'm looking to see what I can find on the dollar crosses. If I take any new trades, all signals will be shared inside of our VIP room. So I'm going to be watching some of the dips on these things. You got NAS down 1%. I'm going to go look at that. I'm going to take a look at some of the dips that are forming here on these markets that I'm watching. And of course, also watch some of these dollar crosses. There might be some setups here for us on pullbacks if we can get them. Dollar continues to look really good. That's been a trade we've been riding here inside of the VIP room for a while. By the way, if you're interested, we are kicking off our biggest discount for the start of the new year here. We're going to be doing 35% off our VIP group. If you're not already inside of our VIP room and you'd like to get the trades being sent, just really quick, just a little teaser of what's inside of the group. So every time that I take a trade, you get notified directly on your Discord. If you're in the group, this is a private access link. So if you're interested, by the way, we'll drop the link here. Send us a direct message. This is available now. We kick this off. We're doing 35% off our memberships. It's a one-time payment to join the group. You can see every trade that we're taking. So Forex trades, commodity trades, we trade gold, we trade NASDAQ, we trade S&P 500, Bitcoin, we trade Forex, we even trade stocks and options. We trade a little bit of everything, and every single signal that we take gets sent directly to your phone so that you can see those trades. And most importantly, with the trades, every single one of them comes with a big breakdown, analysis, screenshots of the trade, why we're taking it. And the best part is anytime I'm taking a trade, it's on live personal capital, and I show you my live account all the time. The reason I clarify that is that there's a lot of signal service out there that do not offer that kind of thing. They don't show you their account, but that's something that I think makes us stand out. It's not just a signal service where you're like, oh, they might just be trading a demo. No, it's real live account that I'm taking these trades on and showing the whole process within the group. So if you're not already in the service, great time to join, kick off the New Year's, come trade with us. It's educational by nature. You can see every trade, see all the breakdowns. Don't miss the chance. If we could drop that link one last time as well. For anybody that's interested, you can also go to a1trading.com and chat directly with us there, or we've dropped the link directly here in the chat for you to take advantage of that 35% off discount for the NFP Day stream. So again, shoot us a DM, we'll get you set up. Got a couple people on the support side that help set up memberships. So if that is something that you're interested in doing, I highly recommend you take advantage of that discount and come trade with us. It is going to be a great year. And again, things are heating up to already kick us off here. I mean, my goodness, what a substantial start to the year in terms of NFP numbers coming in. You got Bitcoin selling off here. You got NAS and S&P making big moves lower. Meanwhile, the dollar index up 0.57% here today, yet again breaking through those highs. My goodness, just not wanting to quit. Let's take a look at gold here also, pulling up the gold chart. Where is that at? There it is. Gold back to flat on the day. So, gold not having a massive reaction to this. I mean, yes, if you're looking at the 15-minute chart, this looks big, but notice how gold dropped here and has come right back. That's actually kind of interesting to see that reversal in, kind of bearishness. Actually, one thing that's been so impressive about gold that I keep mentioning on the streams and my videos is look at how gold, despite a red hot jobs print and a dollar that does not want to quit, what's happening to gold? It's still going up. That is so incredibly impressive on the gold side of things. To see gold make that kind of recovery that quick makes me, from a price action perspective, believe that we could be headed to test this area around 2,700. The question then becomes, can we actually break out? And what happens to get us to break out there? I think you have to have, in my opinion, my best guess, for gold to break out at 2,700, you got to have the dollar crack a little bit, right? With the dollar being so strong right now, I have hard time kind of thinking gold has a ton of upside. But when the dollar takes a break, when the dollar pulls back, gold may take a turn. And what I mean by that is take a turn at the winner's circle, if you will. Gold's been on the sidelines here for quite some time, just kind of chopping around sideways, waiting in the shadows, lurking a little bit, if you will. By the way, VIX is up 4.5%. VIX trading at almost 19, suggesting volatility is back in this market, right? So sorry guys, my internet is chopping in and out. When it's happening like that, right? When you've got a very low VIX typically would suggest, you're not going to see markets move all that much. A rising VIX suggests the stock market, Forex market, bonds market, everything is going to move a little bit more. So something to at least consider is keep an eye on the VIX. Let's double check on that 10-year yield. Again, probably just continuing to rip. You got 4.78 on the 10-year yield. That is definitely something to watch out for. Is membership for new traders or only experience? Charles, great question. It is definitely for both. We have people in our group who have been trading alongside in our chat rooms for years, and we have people who are brand new who take advantage of just joining and learning. So I mentioned this again, so bear with me. If you're already a member with us, this might also be helpful to you. So within the group, one thing that you have to kind of understand is like my goal. Okay, we should be better. Sorry, guys. I just switched to my hotspot. So hold on. Can you guys hear me? Let me double check. Okay, I think we should be good. Sorry about that, guys. Yeah, no, I'm still, again, I moved to the country. It comes with its challenges. The satellite internet we have Starlink, it's up and running, but it still has spotty moments. So, anyways, so here's the thing. Whenever a trade gets taken, I go back to the early days of when I was learning to trade. And all I wanted to see was somebody who would actually show me every single trade that they were taking, show that they actually had a profitable track record, and explain to me why they were taking the trades that they're taking. So after painstakingly going through the process of becoming profitable, I now do offer a service where you can see every trade that I am taking. Every single trade that I take, I share inside of my journal, or AKA our signal service. So when I bought the NASDAQ, whether this trade works or not, every trade that I take, right? So obviously NASDAQ trade doesn't look nearly as good today, but every trade that I take, right? Whether it be Forex, I took dollar Swiss longs the other day, which worked out great, right? It depends what you're looking at, right? Sometimes I have good trades, sometimes I have bad trades, but long-term I am profitable and I've proven it, right? I've logged into my account. I've showed you guys, the long-term profitability of what I'm doing in the markets. But the purpose of that is, again, if you're somebody considering our service, I want you to know like, oh, there's actual some proven profitability here. And with every trade, there's a full breakdown analysis behind the trade, why it was taken, screenshots of kind of the analysis on the charts, and much, much more. So if that's something that would be beneficial to you, my kind of thought process with this is I have built the service that I wish I had as a new trader, and I genuinely mean that. So if you're thinking about joining the group, I would highly recommend you at least try it for a month. We do offer monthly options as well, if that's something that you're interested in. So if we could drop the link here in the chat on the producer side, if you guys are interested in joining, we are doing it's a great time to join simply because we just kicked off a 35% discount. All you have to do to get the information on that 35% discount is send us a direct message on our website using the link that's being dropped in the chat. So send us a DM here, and our support team can get you hooked up with a membership, and you can start following along with what's being traded. You can see the trades that I'm taking, as well as Frank. And then Ivan, we also offer Chris Pulvers as a separate service if that's something you're interested in. He's a regular stream contributor here on the A1 Trading Show as well. Doesn't work for our company, but he does share his trades within the group. So yeah, again, dollar Swiss, no relaxing here, it seems. Bitcoin was up 2.5%, now up 1% on the day. That's following a big sell-off in crypto, right? You've got gold. Again, so impressive to me that gold is kind of holding its own gains here, despite the major kind of dollar strength that we're seeing. Really quite impressive. Also, probably my chart of the day today. S&P 500 at support. Does it hold, right? If this holds, if S&P can hold support at these levels, it's very impressive on the technical basis. We have earnings season starting up pretty soon. Earnings season is, of course, major for stocks. At the end of the day, I think it's probably the number one thing that leads to stocks rising or falling is earnings. The economy, the macro situation is very important too, but earnings are ultimately where we kind of get it's the rubric for stocks, right? It's the A+ or C+, D-, right? Stocks trade heavily based over the long term on what kind of earnings they're producing. So as we enter earnings season, will that hold up well? Well, from a technical basis, got to at least acknowledge this support level is holding really well so far. Let's see if it can continue. But what I'd love to see for stocks is let's see if we can get off those lows, right? For stock indices, can we actually break through some highs? Can we start heading back towards that previous all-time high? If that can happen, right? My educated guess would be is if you round off the bottom here and start breaking some structure, very likely that we continue to see a push through those highs onto new highs. I like stocks for 2025. I've been bullish the last few years. 2024 was an exceptional year for stocks. I don't necessarily know that we're going to get the same kind of returns that we got in 2024, but I would be more on the side of thinking that the stock market should continue simply because you've got a good, strong economic backdrop, right? Good jobs data is not horrible news. It just means we've got stickiness and inflation, right? The one positive to this rise in the 10-year yield is that this is rising partially because the economy is so good, right? So although stocks may struggle with higher interest rates for longer, I don't necessarily think that's a massive bear scenario. I think it may cause some scares, some pullbacks in markets, but the path of least resistance for me with a really strong economy is earnings are probably going to be good. Stocks are probably going to continue to do well. It's why that this jobs report is still going to continue to give us actually a bullish signal on, the NASDAQ and S&P 500. The way we've scored this is strong jobs are good for stock indices. It's just you also don't want to see inflation continue to ramp higher alongside that because it takes some of the joy out of it, right? Rising prices can hurt the consumer. It can cause layoffs as the consumer starts to hurt. So we just want to monitor that situation closely. But I think you've got a 10-year yield that is looking, strong for some good reasons and some concerning reasons, right? Tariff concerns, things like that, they're causing some inflationary worries, but there's also just straight up strong economic reads that we've been monitoring on these live streams. Everything seems to be upbeat for the US right now. And as long as that stays the case, the 10-year yield is going to likely stay supported, and with it, the dollar index as well. So we'll continue to monitor that. Guys, we've got Kenzo joining the call here in just a second to give his take on the NFP report and what it means for markets. We'll be heading over to him in just a second. But real quick, we're going to thank our video sponsors, our live stream sponsors with this quick break. We'll be right back after this. If you're someone watching the show right now and you're outside of the US looking for a better brokerage, listen up. I wanted to take a moment to mention today's live stream supporter, Vantage. Vantage allows traders outside of the United States to trade CFDs. You can trade everything from commodities like gold, you can trade US indices or global indices, and you can even trade FX all under one brokerage, and you can connect to MetaTrader 4 and trade directly on tradingview.com. Not to mention, they also have a really good sign-up bonus going on right now. So we'll drop the link to that down below in the chat as well as in the description of this live stream. Check out Vantage. Now back to the show. All right, everybody, and we're back with Kenzo for Fundamental Fridays to react to this NFP report. Kenzo, jobs numbers were pretty strong here today. What are your thoughts on all this?
Yeah, they are like very strong, but I don't think it's surprising. And I think maybe it's because of seasonal, or let's say festive season. November, December there, obviously companies were actually hiring. So I don't think it's going to have much impact on the stock market. I think maybe later on, once the market opens, we might see some reversals here and there. Maybe the effect might be on the currency pairs, but once we come from from November, December, also January, mostly we tend to get higher numbers. So I don't think maybe it's a bit surprising.
Yeah, and again, your take there again, I kind of think that these strong jobs numbers, they're not a disaster per se for stocks, because if you think about it, people getting hired, more jobs into the system, it arguably should be a good thing for stock earnings, which should be okay for stock indices. The bigger question, I guess, alongside it is, if we lose the story of Fed rate cuts are still the best guess of where we're going next, that would be the only scenario in which I think stocks would really, really react. I mentioned this a second ago, Kenzo. When we look at the S&P 500, this technical area of support right around 58.80 seems to be holding well. And again, you may be onto something with, with about 40 minutes to go here, the US stock market will open up, and possibly we could see some reversals or continued selling. Of course, we'll have to see how that 9:30 a.m. US Open kicks off. But so do you think that this is kind of a buy the dip opportunity overall, or would you be waiting for bigger dips in order to get involved?
Yeah, I think we have a lot of stuff actually to watch. But I think where we are, I can say it's not really far. Maybe we might still have some sell-offs here and there, but it is still a good area for us to say, yes, those areas can be our lowest areas. For now, remember, we are now on a new year, by the way. So this is going to be the first areas or the lowest areas that we have. So another thing is, I don't think also the companies will be thinking much about the rates or, let's say, inflation. For this month also, I think inflation is still going to go higher. And for those companies, obviously, they did perform very well. They will be reporting their reports. Obviously, they will perform very well because December, people, they were spending a lot. So that might be actually a very good number. So I think maybe if maybe NFP was like way too aggressive, like to a point where it's maybe 300K, that was going to be aggressive. But for now, I think everything is balanced. I don't see any problem at the moment. But I think this might be the lowest areas.
Yeah, I mean, I tend to agree with you. I think this is kind of a dip buying opportunity. I could be, and everybody who's listening, Kenzo and I could be wrong, right? Things could change. Something could come out of the woodworks. But generally speaking, we've got a strong economy in the United States overall right now. I think that continues to do okay, especially with kind of the deregulation stuff that is expected under Trump. There is, inflation concerns with the tariff stuff, but I think that personally, I think the pros outweigh the cons when it comes to stock market stuff specifically. Question for you too, Kenzo. We've had a lot of people in the audience, of course, talking about gold. Everybody loves talking about it. What are your thoughts on gold here, right? So I thought this was so interesting. The dollar is so strong, and yet gold is holding up pretty well. What are your thoughts?
Yeah, I think at the moment, gold is also interesting. I think, as you know, gold actually excels very well, especially if things are not going well anywhere in the world, or if maybe, let's say, we have some geopolitics. At the moment, we still have those things going on. We still have Russia, Ukraine still pushing. We have Israel and the other ones, let's say Middle East. Everything still as last year. But Trump promised to stop all that. So if he can, obviously, I don't think we are going to see a continuation of this uptrend. I think we'll see maybe a reversal, you see. So I think on gold, it's better to wait for Trump. I think maybe in 2 weeks to see if maybe things are still going to change. But for now, we can say yes, the market is still on that bullish move, and it seems like gold did not even care about bigger or stronger numbers from NFP because the focus is actually on geopolitics, you see. But once Trump becomes a president and here and there, if he can actually have a way to stop those wars, I think we are going to see that reversal. I think this effect or this move that we did not really see now from NFP, I think maybe we're going to see it after. We're going to see some serious meltdown. It's possible.
Yeah, and that's the thing. You mentioned it. So like the jobs report here this morning was pretty dang strong. And yet, the dollar's clearly responding. A dollar's up another 0.4% here this morning. That's another winning day so far for gold or for the dollar. And yet, we're not seeing a huge reaction. I mean, gold is positive today. Gold is up the same roughly percentage as the dollar index today, which is pretty exceptional considering the scenario. I mean, meanwhile, look at currencies, right? Other currencies are getting crushed against the dollar here today. Pound is down 0.6%, Euro's down 0.4%, NZD USD down 0.75%. So you're getting moves in response to the dollar index, but it's so clearly not really holding gold down. I mean, to be fair, if the dollar was weak right now, if you saw the Fed poised to cut rates more aggressively, then I think gold would be way up into the 2,800s. It's just kind of being muted to a degree by this dollar strength, but certainly not rolling over and getting beat up by dollar at this time. So really kind of an impressive response here from gold. And I think that's worth watching because it kind of feels like gold is a coiled up spring right now, right? You've got all this pent up energy. If you get a couple weeks of dollar downside, a little bit of a pullback on that dollar move, gold very quickly, in my view, could recapture those highs and perhaps continue to push higher. You mentioned there's geopolitical risk out there. There's also central bank buying that seems to be back and aggressive. So there's still a story there for gold bullishness, but I think that story becomes exceptional if you actually do get the economy slowing in the US. Right now, we don't quite have that as a base case. Right now, the US economy is very strong, and I think that's part of the reason why gold is kind of being kept in a range. It's not really moving too far, but it's also certainly holding its ground well and not falling apart either.
Yes, you're right about that. So I think the only thing that it's also holding gold like that, I think this year the main character is going to circulate around Trump. I think is holding a lot of movements here. I think some few speeches, I think they're going to actually give us some very clear moves. So another thing, it's also rates. If they're going to cut rates twice, that can also boost actually the dollar. But we don't really see much at the moment on gold. So which means we just have to wait and see. But on the rates also, they might say they might cut twice, but they did not specify how big. They might cut twice, but what if they cut maybe with 75 basis points or maybe 50? That can also be something else, you see. But for now, I think gold is just waiting for Trump. So it's better to wait for the president-elect to take action. Then I think we're going to see the real effect of that on gold and other stocks.
So here's a question too for you, Kenzo, because we've talked a lot about monetary policy, but also fiscal policy with the Trump administration set to take office here in about 10 days. What are your thoughts in 2025? Do you think that monetary policy or fiscal policy will be more center focused for markets? Do you think people are going to pay more attention to what the Trump administration is doing or what the Fed is doing? I know, of course, both matter, but do you think there's a possibility that we see more of a shift in focus towards the Trump administration and what their policy changes are, more so than what the Fed does next?
I think the way I see it is just an opinion. I think investors or people mostly they do or they actually decide or take action based on emotions. So actually, I think they give their trust to certain individuals. So I think Trump, to me, is a pro-business. So as long as he says he's promising businesses or let's say Americans good economy, I think it doesn't really matter. Obviously, we will see the market going higher because they trust his decisions. Plus, they added Musk there and the other guy, I forgot the name. So all those guys are business people. So which means they expect them to take the right decisions when it comes to business. So maybe now things might look tough because we still have next year, we still have the other year. So now they might say, okay, we might cut twice, 1, 2, 3, but you might think maybe we might have some good results going further. But for now, I think everyone is thinking positive about Trump. Tariffs, but they might not really be good. I don't think he will just continue with 100% and stuff like that. It's just business. Maybe I can say challenge is business people do that, obviously. So I think he's trying to challenge other countries to do better or to do business with US or in the US. But I don't think 200% tariffs or 100% tariffs is going to work very well. And I don't think his administration will allow that. But at the end of the day, all those decisions will actually favor most of the Americans, which means that is going to be good for economy and that is going to be good for those companies. And I think that is going to be good in the long run.
Yeah, no, I think when it comes to most of the less regulation and that side of it, right? The keeping taxes where they are rather than potentially increasing them, which was a little bit of a concern with Kamala Harris for corporate earnings on that front, right? The whole process of those two things are definitely more favorable to stocks. The question, I think, is more about the tariffs. You have like the good and the bad, right? The question of tariffs is arguably the bad stuff for stocks. The question of deregulation and low taxes are the good side of stocks. So the question, I guess, investors and traders alike need to ask about stocks, if you're trading the indices, is which one is likely to be more, more powerful. And I actually think that tariffs are very, very powerful. However, I think that there's probably a good chance that the fears around Trump's tariffs are higher than the reality of what will happen, right? The fears of how inflationary, how catastrophic they will be to global trade. Granted, in 2018, there were some pretty big stock market moves to the downside in response to the trade war with China. But I think that Trump knows that. He also knows that the stock market is concerned about inflation, and Trump is a stocks guy. He cares about how the stock market performs. And I think that that's also a bullish catalyst, is him being aware of what needs to happen to make the stock market go up is like a weird extra bullish catalyst for stocks, at least in my view.
Mm-hmm. Yeah, I think there is a real panic on the tariffs, but it's not something that we can expect within the first week or the first month. It's something that they're going to discuss because that might hurt the US economy or companies almost immediately. Or let's say other countries will also do the same. They might do the same to respond to him. So obviously that will be some negotiations and stuff like that. If you still remember tariffs, Chinese tariffs between US and China, actually, the time with Trump, it was not like an overnight thing. Actually, that took very long. And if I
Mhm.
still remember, some of the tariffs, they were not actually in place. Some, yes, they were in place, but not everything. So even now, those, they might take long because you can't just change everything within a day. So it means some of the things they will take maybe more than 12 months to approve, because you have the House which has to approve everything. So some they're not going to approve unless if everyone is
Right.
just agreeing with Trump, then they will then put everything there. But I don't think it's something that he will just allow. I don't think everyone will allow that. Some, maybe other things, maybe tech or semiconductors, maybe they might do that. But still, we still need China as a business partner, because if all those companies they're going to increase, what if China do the same on those companies? So it means now you're losing also some of the customers from China, and obviously there are a lot. It's a lot of them.
Yeah.
So you have to also think about that. So I don't think everyone will be agreeing, but yes, somewhere somehow Chinese companies, they were doing like some serious business, which they don't really have enough tariffs. If you check some of the things, it's actually true. Because there was these rules before the time China was still trying to get back up when things were still lower. So Chinese goods were not actually having a bigger tariff. So which means they were just selling and just making enough profit. So it's actually good to add tariff, because even Chinese companies, they also add tariffs. I mean, Chinese economy also add tariffs on other products which are coming from other countries. So it seems like it's something which is crazy, but it's actually normal, you see.
Yeah, and sorry, Kenzo, there's a little bit of a connection issue. I'm not sure if it's me or if it's on your side. If the audience could let us know on that, that'd be awesome. But one thing to think about with Trump is a master at getting retweets. And what I mean by that is he is so good at getting everybody riled up, upset, or even, his side of things, really excited, but he's a master at getting a ton of attention. I mean, it's arguably why he's going to be the president again and was the president the first time. He's very good at getting everyone's attention, and has a track record of good things and bad things. Some people love him, some people hate him, but one thing you have to acknowledge about the guy is he gets everyone's attention. I mean, the sales for all these media companies following his departure last time around, they struggled, right? Their views struggled big time. So clearly he is good at capturing interest. Lee mentioned that he actually mentioned taking Canada and making it the 51st state of the United States, which of course, I don't think many Canadians would love that. But from a theoretical standpoint, if we were to combine all of North America, Mexico, Canada, and US into one country, it would be super advantageous to everyone. But you could combine and make a super continental country, but obviously I don't think that will ever happen. But the point is, you can see like it gets everybody's attention, gets everybody talking about him. I think that there's a bit of an essence to that in a lot of his proposed ideas too. I've been saying it as he has a very big bark and sometimes a big bite. Sometimes the bite matches the bark, sometimes it doesn't. Sometimes he's just speaking. I think that, when it comes to the stock market, though, we have a couple things that we know right off the bat. We know there's not going to be any proposed corporate tax hikes, which was a scary thing for stocks, right? We also know that there is going to be some kind of tariffs to a degree, but we don't know whether or not that will be super inflationary. We economists are on both sides of that. There's some people, I think, maybe more consensus that it could cause more inflation than it doesn't, but we don't know how extreme those tariffs will be. Economists might be looking at, well, like if we get these extreme tariffs, that could be very inflationary. But what about if we get a much lesser variation that still kind of accomplishes the goal there, but doesn't necessarily cause a ton of inflation? Look, we don't know what fiscal policy is going to be. And on this channel, we're not fiscal policy professionals. We're traders, right? And right now, the market overall has told you that the stock market likes the idea of Donald Trump returning, right? We saw a huge surge initially. We've seen some pullbacks on inflation concerns as well as tariff concerns. But I would still say that the path of least resistance, we saw it for Trump's first presidency, and I think we'll likely see it for his second, is that the market did very well in the previous run with Trump, except for the COVID part. And again, it doesn't matter if you like the guy or not, just look at history. We have some examples of Trump in the past. Stock market did very well under him. So did we had a massive government spending. So did we under Biden. But the big question is, again, I think right now the market is path of least resistance is higher until proven otherwise. If you get some tariffs that are worse than we fear, then we have to probably pivot. But path of least resistance, in my view, would be stocks continue to look good with a strong economic backdrop. The side dish would be, if you get inflation getting out of control, the bond vigilantes might have something to say. We might have, rates potentially staying flat for a while, or even discussions of rate hikes. Do you think there's any chance we see rate hikes in 2025, Kenzo?
I don't think so. Remember, we're coming from some serious higher inflation. So, and slowly they are still going down, even though a few months ago, let's say 2 to 3 months, they were still trying to go up. Let's say inflation was going up slowly, but I don't think we're going to go back to 2022, 2023, 2021 there. So I think Trump is going to get the economy, which it's now trying to solve the issue of inflation, and slowly we're getting there. So even though they said they might cut twice, to me, I think it's still a good thing, because they're not increasing, they're still cutting. And as I said, they might cut with 50 basis points, they might cut with 1, they might cut with 75 basis points. So we don't really know the actual number. But what we know is, even though the inflation is still a bit sticky, but it's way much better than last year, January, or last year, January. So, which means the economy will adapt. Consumers will also adapt to whatever that we have. As long as the economy can perform very well, sometimes people, they don't really care much about inflation. As if maybe, let's say, on the NFP numbers, we saw the income went higher a little bit. So which means people, they will be getting a little bit more, if I'm not wrong there. So it means wages are now going up. So they're trying to catch up with the inflation. So obviously that can also help. So which means we don't really, people, they will forget about that, because they're not, we expect inflation to the rates to go down. So I think it's not really as bad as it seems, unless if maybe tariffs have that effect. That maybe might be something, but we don't really have a proven record of 100% tariffs. Maybe that will be bad, we don't know. But I think what we see on the stock markets, the trends still shows us that there is a chance for the market to go higher.
You added something too that I really liked there, Kenzo. You mentioned like this doesn't necessarily feel like 2021, 2022. I would actually agree, because if you think about 2022, one of the reasons that, especially for tech stocks, right? Tech stocks really got pummeled in 2022. A lot of people who have not been trading since 2022 may not remember this period. It was very painful. If you're somebody on the tech trade right now, if you're making a lot of money from, tech stocks going up, you just have to, know your history. Tech stocks dropped on average 37 to 38%. And that's not the small stocks. If you held things like Shopify and Spotify and Palantir and Carvana and all these high risk stocks, they dropped by 80%, 70%, massive drops in individual stocks. I just want to point that out, because one thing that you said is it doesn't necessarily feel right now like 21, 22. Well, 22, we had one extra caveat, which was Russia, right? Russia invaded Ukraine. It put absolute gas onto the fire of inflation, right? We were already dealing with post-pandemic inflation that was rising, but then Russia invades Ukraine, oil prices go sky high, and that triggered major inflation fears, which caused the market to sell off. So if you think something geopolitically is going to go crazy, yeah, we could see another 2022. But I don't necessarily think that that's the base case for 2025. I don't see a massive geopolitical outbreak happening. It could happen. We never know the future. Something crazy could happen with China and Taiwan, or Russia and Ukraine could escalate. I don't know. But the base case for me is I don't think that that necessarily happens. And that could keep oil prices at bay. And while we may see some pullbacks due to inflation kind of on the rise, I think that this rise in inflation is not super threatening unless you get a geopolitical supply, breaking event again. That really made 2022 way worse. Was the inflation got crazy because supply constraints, just like in COVID, got bad again. Is there anything I missed? Would you add to that?
No, I think we covered almost everything. Another thing that I can add, maybe I can say, I like the tone that Trump used, especially when it comes to wars. Most likely, he doesn't really want to add more onto this geopolitics. It might be crazy with the tariffs and stuff like that, but when it comes to tensions, is way too calm, and which is a good thing. And every company or every economy likes that. So I think that is also something that is very positive about Trump. So if it's not actually warmonger, it means that it's going to be good for his economy and other economies all over the world, and that is good.
Yeah, I know that there's already been some. I gotta find where I heard this rumor, and someone fact check me, please. Make sure you go find this. But I believe Trump has already made kind of not threats, but he's already kind of talking up the whole situation in the Middle East, saying like, you guys better sort this out before I'm in office. And that's got to be scary to other countries. Trump is not a guy that I feel like you want to just like mess around with. And that's not, he's any president can be intimidating if they wield it. But I think Trump is trying to be like Reagan 2.0, to be honest. And Reagan was all about like the big stick concept, right? Like if you have the biggest military, you use it to accomplish your goals. So, that's like America 101. We've been doing that for 100 years or whatever, but just something else to add to the picture. Kenzo, I gotta move us along. We got our next stream starting here with Forex James, but I do want to just say thank you very much for coming on. This is probably like our 50th NFP day together. So I appreciate you coming on and sharing some insights about the jobs report and about your view on the markets. Before we let you go, everybody who's watching right now, do us a big favor. Make sure to go subscribe to Extra Hot Forex. That is Kenzo's YouTube channel here. If you could subscribe, make sure to go comment on some videos. Let them know you saw him on the A1 Trading Show. It's a great way to just show support to our guests who help contribute to make this show as good as it is. Kenzo, I appreciate you. Thank you very much for coming on today.
Thank you very much, man, and also your viewers.
All right. See you, Kenzo. Okay, guys, up next, we've got Forex James taking over the stream. I just also wanted to reiterate, if you didn't hear me say it earlier, we are currently doing 35% off our signals group. Every trade that we take gets shared to our members, and it is currently discounted by a massive 35% off. You can get one-time lifetime memberships, or you can go for a monthly pass to try it out, see if it's right for you. Just a bit of context, every trade that I'm taking is on a real live trading account. You get my entire trading journal. I trade Forex, I trade indices, I trade cryptos, I trade stocks, I trade a little bit of everything under the sun. And every trade that I take gets shared directly to you in our Discord server. If that's a service that would be helpful to you, check out this link here being dropped in the chat. If you send us a direct message, we'll hook you up with that extra 5% off for the live stream viewers that are with us right now. So take advantage of the 35% off discount code that you can use there. Just send us a DM. Our support team is standing by to set up memberships for those who are interested in taking their trading to the next level in 2025, trading alongside me and the team. We also have a chat room, we have coaching calls, and we do so much more. It's a great group for those looking to take their trading seriously in 2025 and level things up. With that said, guys, we're going to take a quick break, thank our sponsors, and then up next, we got Forex James taking over the show here for a little bit. So stay tuned. He's your host just after this.
Trading is hard, but trading by yourself is even harder. This year is your year to join a trading community. The A1 Trading VIP Discord community is made up of thousands of traders around the world committed to helping you learn and to find better trade setups. Inside of the Discord, you can browse Trader Nick, Frank, and Ivan's trades on all things Forex, stocks, options, and ETFs. You also get exclusive access to Ivan's live coaching webinars, where you can learn from a seasoned professional in the industry and even ask questions during the webinar. We also have chat rooms filled with traders who share their thoughts and analysis daily. It's a space for both veteran and new traders alike to come together over their love of markets. Want to take it a step further? Upgrade to Pulver Alerts, where veteran money manager Chris Pulver shares his daily options and stock positions. All things A1 trading are happening in the VIP Discord. Start your new year off on the right foot and join today.
Hello. 1 second, guys. Sorry. Okay, there we go. Just had to share this on my channel as well. Hope everyone's doing well. Hope you all survived NFP. I know I did. Made a decent little return here. Traded into NFP. As you guys know, I'm DCA, so if this trade moved against me, would have shorted again. No issue at all. So yeah, took a short into NFP, held it through, made a small gain here. So made, what was it, 1.48% today on NFP, not too bad, $175. Currently up now almost 41% on the portfolio, 9% for January. So quite happy with that. Although to be transparent, I am actually currently sat in a bit of a nasty drawdown here on Euro Pound. So it's not all sunshine and rainbows, but you know, I'll take what I've got. So that's it. That's my portfolio update done for today. Hope you're all well. Alan, hello. Shirls, hello. Grids, good to see you. Bernard, Lauder, I'm not sure how to pronounce that, sorry. Hello, James, just want your opinion on this one. Is it a good idea to trade sitting in your bed? I mean, technically you could trade anywhere, I suppose. You know, do what you want to do. I wouldn't say it's a good idea. I need, I've got 3 screens here and it's not enough. I ideally need another 2 because I need news flows. So I have, got Discord, I've got YouTube, got charts. I need another one for, just market updates and stuff. So yeah. Phantom Lee, hello. Alan, 12% gain being added in since 1.121 euro. Amazing stuff. Kevin, Christina. Wow, there's a lot of you guys here today. Why'd you close EU? Phantom, I swear we've discussed this so many times. The reason I closed EU is because I'm not interested in holding long-term positions on euro dollar. I'm interested in getting in, getting out. If I was holding one position on euro dollar, I'd probably have made 5-6% since September. I've like 10x that almost by DCA, and so that's why I'm doing it the way I'm doing it, is to maximize my return. Watching from Kenya, crazy. Mark, hello. Jaylene, good stuff. Okay, right, let's get into the market. So I'll sit here for the next hour. I think I'm on for saying hello to people. Euro dollar obviously had a nice move on NFP. We had really strong numbers for NFP. I'm not sure what the release actually was. Let me just double check. We also had unemployment come out very supportive for the dollar. So yeah, NFP came out at 256, beating forecast and beating previous. We had unemployment rate come out at 4.1, expected or forecast was 4.2, previous was 4.2. So supportive labor market data, that's very, very good. Obviously the dollar has come and hit 110. As I said, that was my target. I've been saying 110 for quite a while. So yeah, 110's been hit. Next target now is 112 or 112. So we'll see. So if anyone's wondering about the dollar, all the data in my view is supportive. There might be anomalies here and there in terms of supportive data, but overall I'm more than happy to say that the dollar is pretty set really to continue higher unless Trump comes in and starts playing around. From a technical view, if we go on the quarterly chart, so the 3 months, we've got a very, very clean ascending range here, or ascending channel, I should say. So next stop, in my view, is the previous highs here, which are from 2022, from sort of July, October. So it makes sense really to look, and that's why I'm looking at this 112 level. Obviously, this is the previous highs. So again, just from technicals, that is the sort of target I've got beyond 110. So we'll see if we can break and hold above 110 at the moment. Picked up UJ from 6th of January. Amazing. Dollar yen is an amazing one to be in actually at the moment. Just be careful of 160. Surge. Hi, James. I love scalping high impact news. Has been making way more profit this way with a high win rate. My day trading pattern. Yeah, news trading can be very, very profitable, but it can also be very dangerous. Thing is with NFP, and this is something that I don't really mind. It's why I'm quite happy to trade into news, because generally speaking, we'll have the spike. Typically, if you go back and look at NFPs, unemployment, sort of day-to-day releases, not necessarily rate decisions, because that's slightly different. But normally we will have a spike, and then we'll have obviously the move down on the spike, and then a correction eventually. This correction might take a while, but eventually, normally we do see some sort of pullback into the pre-news price. So you can always, or try to get out relatively unscathed if it doesn't go your way. So that's why I'm quite happy to trade news. I don't like news trading, but I do like their outcome. Fair enough. Gold, we can have a look at gold. Let's see. I've really not been paying attention to gold recently, actually, just because it's been such bad price action, or so uninteresting to look at. But it seems like we are moving to the upside now. Finally, so we broke out of this range temporarily and then came back in, and we kind of got re-trapped within this zone, if you will. And now we've finally, again, broken out. So now maybe the time to start looking to go long. We've established an upside trend here on the H4. Obviously, we've just had NFP, so probably now isn't the best time to go in. But we've got the RSI overbought, so signals we might be able to get some sort of retest or some sort of pullback into the zone before we continue higher. But on the other side of that, as I've been saying, there isn't really anything that makes me want to buy gold. There's no strong economic or geopolitical situations going on right now. News trading is obviously only for experienced traders. Yeah, I would say so, actually. News trading can be detrimental. Hi, James. Selling since 1.3 pound dollar. How far are we going to continue the downside? It's difficult to say how long we're going to continue down, because obviously data could change very, very quickly. However, what we can do is look at the basics, which are the technicals. So these are the levels I've already got marked up of interest, really. So 1.2 is the first level I would be looking to start booking some profits, maybe scaling in if we see a break of 1.2. But yeah, 1.2 has been mentioned quite a lot within the institutional side of things, within bank reports and research papers. So 1.2. Then beyond that, we've got this 1.18, which is just the bottom of this low. And then obviously from there, you would continue to basically just look at where the next daily supports are, and just be very vigilant as well on what's the news at. How's the pound doing? How's the US dollar doing? What's Trump doing? All those types of things, and keep up with what's driving the market. USD CAD. I'm actually in dollar Swiss as well. But yeah, USD CAD, we can take a look. Bit late to dollar Swiss, unfortunately. I think Nick got there a bit before me, but that's fine. So dollar CAD, I would say, is pretty much set to go and retest the 2020 and the 2016 highs. So we've got the high here. Obviously, again, this was from 2020, and then we've got the one here from 2016. So we didn't quite make the 4-year cycle. So obviously 4 years, so we've got 2016, 2020, and then we could have had 2024, but we didn't quite get there. But I would say it's still within range. I'd say that's probably the more likely place we're going to go to. Beyond that level, which I think is possible, again, depending on how the dollar's how the fundamentals for the dollar continue to develop, which so far so good, continue to the upside. However, saying that, there isn't really, in fact, I don't think, well, there is some structure, right back in 2002, but there's not really much to go from in terms of targets. So it would really be a case of, if you went long on the retest, you would really just have to go and sort of trail stops underneath the current, or sorry, the previous lows, really. Also, guys, I got some branding on the A1 show. Can you believe it? Look at that. Check out Elite Traders. How long is a piece of string? Yeah, Sean, that's a good answer, actually. I got my first taste of news trading with dollar yen on NFP day, ruined my month. That's the way it goes. Yeah, you can get lucky only so many times, and then one day you'll get burnt. James, there's economic uncertainty as for Trump's tariffs and possible trade war, as well as geopoliticals are driving gold at the moment. That's true, Lee, but for me, it's not enough. And that might sound a bit silly, but it's just, it's not for me. I don't want to trade off that. When I like to trade gold, it's off things like war. Obviously, it sounds horrible, but this is the job of traders. When there's crisis, we benefit quite well. So that's more the way I like to trade gold. It's as a obviously risk off, but I hope you get what I'm trying to say here. Can I look at oil? Yes, we can take a look at oil. Oh, wow. Didn't someone say earlier, why is oil only moved up $4? I'm not sure, I can't see it, but I think I saw that in the corner of my eye. I wouldn't really be concerned by oil only moving up $4. I'd more be looking at the fact that oil's moved up almost 6.2%. But yeah, I think oil is set. We've been talking about oil a little bit on this show in my segments. I've been saying that I'm just not sure. And I think I might have shot myself in the foot a little bit there, because the reason I wasn't sure is we had this weekly 200 moving average that, has the potential to act as dynamic resistance, which, has happened previously where we broke above and then failed to hold. And then it obviously was a support back in this time as well, back in sort of June 2024. So I was a little bit hesitant really to go and buy the market at this price earlier. We also had the daily 200 right here. So this was, again, a little bit of a put off for me. But if we take a look at the Edge Finder, it is the strongest reading with a score of 11. It's gone down slightly. I think it was 13. But either way, it's still a very good long position to take, I think. But yeah, I'm not really an oil trader these days. So that's basically all I can give you, to be honest. But yeah. Angus, hello. I don't think we can break these highs on dollar Swiss. Oh, I think we can. It might take some time, but I definitely think we can. In fact, yeah, I suppose we do have, there's strong resistance through here, but the dollar is, again, dollar dominance season. So I'm quite happy to buy into it, because if I don't, like I've been waiting for on euro dollar base again, since September, I've been waiting for a pullback to get into a swing trade. I've not had a single one. So I don't want to be in that position where I'm just like, oh, there's a resistance, I'm just not going to buy. I'll take the stab. I've got 3% risk on dollar Swiss. So if I hit stop, not a big deal. Waited for a pullback on oil, but did not get in, but no FOMO. It's the best way to go. Hi, James. Any idea why gold is moving up despite the news favoring the dollar? Good question, actually. Let's see what the dollar's doing. Let's go 30 minutes. And let's put gold as well. I'll be honest, I'm actually not sure. They're not mutually exclusive things, though, with the dollar and gold. They can both move up at the same time. It depends what investors are looking for. But yeah, I wouldn't be overly concerned. In my opinion, still not enough reason for me to enter oil long. Very shaky structure. Yeah, I'm a little bit concerned with oil, and I can't really tell you why. I don't have any reasoning. I just have a bad feeling about oil at the moment, which, I've missed basically all the move now anyway, so doesn't matter what I think at this point. My entry on dollar Swiss, yeah, I can show you. Let's see. I actually don't use TradingView anymore other than for these streams, just because I basically do all my trading on MetaTrader, or all my analysis really. So this is my entry, the blue line here. So at 0.91257 is the entry. So far in profit, but nothing too crazy. It's actually quite a long-term position. So this is the weekly time frame. You can see we've got we're at the previous 2 weeks, or the bottom of the previous 2 week candle, and then we've got take profit all the way up here. How to stop fighting this demon of wanting to always be right. I always tell myself nothing is 100%, but deep down I always fight that reality and end up over analyzing a good and simple setup. That's a tricky one to really sort out, to be honest, because a lot of that relies on data. So when I get a lot of these questions like, oh, how do I stop over trading? How do I not get in FOMO? My psychology's bad. A lot of it is because you don't have the data to overwrite the thing in your brain that is making you have that thought in the first place. So, for example, if you're sat here saying, I know this trade looks good, but what about that? What about this? Oh, there's also that. Obviously, that can be good. You need to also take into account everything that's working against you, but you also need to play the stats. You need to play what your strategy tells you to do. So if you're lacking data, you're not going to have confidence in it. So if you go back and back test it 500 trades over the past 10 years, you're going to have a pretty solid idea of what is a good trade and what's not. Liban, hello. Marcus, I think gold is bullish because of inflation fears. Yeah, that would make sense, actually. Phantom, update on euro pound. I don't think anything's happening on euro and pound right now. Currently just sat in this drawdown. Price isn't really doing anything. We've been ranging for the past 2 days. So there's nothing to do there at all, unfortunately. I literally encourage everyone to join Elite Trades. I thought I knew fundamentals really well until I joined and realized I've only scalped the surface. Devin, I appreciate that. Thank you. Bernard, thank you again as well. Any ideas on pound yen? Lee, that's also a good point. Yeah, lower the risk so you can afford to be wrong. Because you'll get to a point where it's weird, actually. There's stages in trading. So a lot of large capital traders. So take Nick, for example. Nick, as far as I've seen, as far as I understand, he's quite low risk. So, he's got, I think, 7 figures from what I've seen. But you'll never see him risking crazy amounts of money because he doesn't really need to. And it's the same with a lot of large cap traders. Whereas I'm not quite at that same level. So I'm happy to take a slightly larger risk to also get that benefit and make the money that I want to make. But obviously when you're new, you want to risk 50% to make, to flip your account and buy a Lamborghini. So that you go through all these stages of extremely stupid high full margin risk, then you'll go probably low risk, then you might move back up to slightly higher, more controlled risk. Then when you actually start, making it and becoming wealthy, you might reduce back down to 0.2, 0.5, 1%. That's just my experience. Of course, risk is a very personal and individual thing. My win rate is below 40% and I come out on top in the long run. It's a hard stat to swallow. Yeah, well, again, play your stats. It doesn't matter what your win rate is as long as you're making money. I don't use MetaTrader anymore. I only use TradingView now. Do you want my magic keys? No, thank you. I appreciate the offer. I believe it is a personality problem. I've been profitable for 1.5 years. And I know exactly my data for the past 5 years and still have the issue about wanting to be right. Well, if you've been profitable for 1.5 years, you're doing something right. So I wouldn't worry too much. But it's, trading's never going to be a walk in the park. You're always going to have doubts. You're always going to have the thing of, oh, I've been profitable for 6 months, but what if this is the month where I'm not, and then it goes downhill from here? You're always going to have that voice in the back of your head. I do. I've been trading for a long time, and I was, there's times where I'm doubting myself, but that's human. We're people. We've got brains and emotions, and there's only a certain amount that you can turn that off. Which is actually why I post on Twitter so much, because I think I push a lot of emotions back because I'm on the charts basically all day. So I just put all of my impulse and feelings onto Twitter, and sometimes that backfires. But there you go. Again, we're human. We're not always perfect. Technicals look like it's continuing bearish, but I just saw it turned bullish on Edgefinder. It's fine. Again, I'm not really trading the fundamentals on Euro Pound. It's more of a just a mean reversion trade, so I'm completely fine to hold it. Market AI, I will cover that off this stream because obviously there's Edgefinder here, which is what I promote. So there you go. What do you think about Euro Pound? Euro Pound, I'm sitting on the bearish side again, waiting for a pullback, but to be honest, with the way the pound's going, it might be flipping more towards a bullish market, maybe in the short term, but yeah, I wouldn't really be going short right now. Obviously, I'm sat short, but again, this is just the way I trade. Can you please look at CAD Swiss? Yeah, we can have a look at CAD Swiss. I don't think there is anything. If you're the same Cedric from my Discord, we've already had a chat, I think, maybe. But yeah, there's nothing on the fundamental side that really interests me. Obviously, with rising oil prices, the Canadian dollar is going to benefit. So that does push me towards a long side bias. But yeah, other than that, there isn't really anything I've got for you. Technicals, again, they look okay. You just got to be careful because we are in this sort of 4-hour range here. So there is a possibility that we see this range continue, but then again, you can always say there's possibilities, but there's also the possibility of the break, the retest, and a continuation to the upside. If I had to say one way, I would more lean towards this continuation to the upside, but again, it's just off technicals. Take a look at BTC. I actually added more into my Bitcoin wallet this morning, which is probably not a great idea because it's basically the same price I initially bought, but whatever. Thing is with Bitcoin, I find it very, very difficult really to analyze it. So for example, we've got a really nice support here on the H4. Basically, the only things I really understand about crypto is it's much more driven by retail than things like currencies. So I'd be more looking to just buy support, sell resistance, and follow very basic, typical price action. But that's, again, it's coming from very limited crypto knowledge. So again, I don't want to really go into too much stuff here because I could be really, really wrong. I don't want someone to listen to my Bitcoin analysis and lose money. But yeah, again, but just following basic technicals, I'd be really looking to just buy support here. 40% is not a bad win rate if your R&R is above 1 to 2.5. Absolutely. You can make a lot, even with a 30-20% win rate, you can still make money. But yeah, risk reward and win rate are heavily correlated, so you just need to account for it. I risk more. Yes, I'm relatively high risk compared to the average trader. CAD just get really strong job news. Yes, that's also true. I completely forgot. CAD also had employment change, unemployment rate, both positive. Unemployment rate ticked down, so that's positive for the labor market. Employment change also ticked up actually a lot. So yeah, positive CAD news as well, to put that into your favor for CAD Swiss, Cedric. Gold with already Russian name person. I am not even going to try to say what that is. I don't know. We've already covered gold though. Feel free to rewind. I might go over it in a bit as well if I start running out of things to talk about. Australian dollar, US dollar, we broke the lows, a lot of potential to downside. Australian dollar, US dollar, in fact, all of the US dollar pairs have a lot more potential to continue down. Again, we've just had not CPI, we just had NFP and unemployment. So we did see a very aggressive move to the downside. But as I normally say, or as my rhetoric, I guess you would say, is we do generally see news moves get corrected. So from here, I'd be looking for a retest of this support and a continuation to the downside. And I think that's quite a sensible way to really go. If you're waiting for a really large pullback, you might be waiting a while, because you could have been sat here waiting for a pullback. The only one we've really had was back in November. So my approach to the US crosses really is quite aggressive. Just get in and hold rather than trying to wait for the perfect setup, because I've just not seen any really. Euro dollar's melting. Yeah. Dollar's very strong today. Lauder wants indices. Okay. Yeah, indices not performing too well. It seems like we are going to get the rate hold in, well, this month. Let me just pull up the FedWatch tool here. So what we've got is an extremely high probability we're going to get a hold. So there's no more rate cuts. Obviously, rate cuts are very beneficial for stocks. I mentioned it yesterday, so I won't do it again today. But essentially, lower rates make borrowing a lot cheaper for businesses, meaning, you know, it helps them grow. They can expand and develop for cheaper. So obviously benefits. Whereas if we're getting rate holds, rate hikes, that sort of optimism isn't really there. So I wouldn't really expect too much on the S&P or the Dow, Russell. Nasdaq's slightly different because obviously Nvidia's just a machine. But yeah, to be honest, more say downside is likely rather than upside. But again, Nvidia is slightly different, just in my view. So I wouldn't be too mad about just going long off support. Again, it might not work out. I'm not saying this is a super high probability trade, but I would, if I had to choose between the S&P, the Nasdaq, and the Dow, I would go long on Nasdaq. Yen pairs, shills, chosen the worst thing. I hate yen. Yeah, we were discussing the yen, I think it was yesterday. These streams, I've started streaming on my channel as well, and I'm mixing them all up now. They all just feel like one thing. Days are merging together. God, my brain's turning to mush. So the yen is tricky because we are, in my opinion, due for an intervention. It's just, it's fine. You don't need to apologize. I'm only joking. It's tricky because the yen seems very bearish. I wouldn't want to go long. You know, I don't want to fight this really aggressive downtrend. But the thing is, I also don't want to put myself at risk of an intervention. So if we go ahead and have a look at dollar yen, it's been, you know, the common thing to hear now is 160, because that's now what is known as the danger zone. That's where we start seeing very high likelihood that we're going to see an intervention by the MOF. Now, we had the same thing previously when dollar yen was just on its rocket ship to the moon. We had, you know, it was like 145, 150, 155, 160. And we got interventions periodically at these levels, but it wasn't anything too major. Then we got to 160, slightly above. And that's when we saw this huge melt to the downside. So yeah, just be very, very careful on yen pairs. Because, you know, I don't want to come in here in a couple of weeks' time and see people blowing accounts because they went all in on yen shorts. Pound dollar. Okay, let's have a look at pound dollar. Actually, I just realized we already covered pound dollar, but there isn't much at all that makes me want to go long, especially, you know, as I said at the start of this start of my segment, the pound, to be honest, is seeming even more weak than it already was. So I'm quite happy really to start loading up on some short positions. I think the first target would be sort of 1.21 to 1.2. That makes the most sense in my view. And then beyond there, we just look at daily sports. Where is the next low? And then trade it into that level. Hello, who's interested in know how crypto works? I'm good, thanks, Nikki. I don't think this is the stream to try and advertise your crypto investment scheme. James, how ECB tackle their currency against dollar? Well, the ECB seems to be in a little bit of trouble, to be honest. The Eurozone is really underperforming. We've got the German data and French. I mean, the French political side of things has actually calmed down a little bit now, but German data specifically is really, really weighing. The ECB doesn't really show any signs of having much in plans of recovery, although there is a chance they might start turning a little bit hawkish just to prevent a complete collapse against the dollar. I'm just going to have a look at what the probabilities are. Give me 1 second. Central bank rates. So the ECB, there is a 95% probability they're going to cut their rates to 2.75. Their next meeting's on the 30th. Yeah, it just seems like a pretty strong cutting cycle. The Fed seems pretty stable as well. Again, as I already showed you, we've got a very, very high, almost certain chance that the Fed is going to hold. So, you know, that's it. I wouldn't say the ECB is really doing anything to tackle anything. They're in some trouble, I would say. How do you do top-down analysis? CJ, very, very simple. Just look, well, I just look on the weekly, the daily. So I'll say, okay, we've got 200 moving average here. Also on the daily, so you know that's above price, so price is in a downtrend, so I'm looking to sell already. Very clearly moving to the downside here as well. We've got lower highs being formed continuously. So then I'll go and look, I'll zoom out a little bit and say, okay, we've got support here, I've got support here. So I've got my targets, I've got my trend, and I just need to go and find pullbacks on lower time frames to trade them into those levels. There's no need to overcomplicate things, really. I also use fibs sometimes to obviously identify pullbacks, but yeah. Hi, what's your take on WTI? I think oil is due a pullback. If we're going off the edge finder data, then it seems like it will continue to go long, but it's just, yeah, not for me. Gold is on, must be blown accounts. Actually, let's see what retail are doing so we can have a little giggle and see if they are blowing their accounts. Actually not. It seems like let's just keep metals here. So got gold 64.44% along. So actually the majority of retail are making money off gold now. So they're actually positioned quite well. Kevin, you like my X tweets? Good stuff. Yeah, I think I need to relax on X a little bit. Actually, I've been going a little bit overboard recently. James, do you think USD CAD has no more upside potential? It's ranging the last weeks. I think dollar CAD has, yeah, I think it's got a lot of upside potential actually. I think it's in a bit of a precarious level just because it's very extended. So if we look here on dollar CAD, it's very extended to the upside. It's just been a non-stop train really. So I think we're going to see some profit taking. We're also going to see people trying to buy into this market. We might see a small reversion, just a small pullback here, but generally speaking, there's nothing really holding dollar CAD back other than, you know, we do also have oil prices that seem to be quite strong at the moment, but the dollar again is dominating. Euro Swiss. Euro Swiss. I'm not sure there's really anything on Euro Swiss on the edge finder. Let me just double check. No, not really. It's neutral with a score of 1, so it's more bullish than bearish, but it's yeah, there's nothing there that would lead me into a trade. The trend is bearish on the daily. The weekly is also bearish. So to be honest, yeah, not much here in my view. H4 trend is short-term bullish. So to be honest, yeah, I would stay away just because there's too many conflicting things. Again, edge finder's flat. We've got 2 bearish higher time frame trends. We've got a bullish lower time frame trend. So really, I guess you would either wait for a more established trend on the H4, wait for this resistance to break and start going long, or wait. Really, that's about all I've got for you on Euro Swiss, unfortunately. How do you find which pair to trade? It's very simple, actually. I'll show you. So I open MetaTrader. I'll click on Euro Dollar, and I will click sell. That's basically it. But no, seriously, what I actually do. Well, actually, yeah, to be fair, that is basically what I do at the moment. But the way I come to Euro Dollar opinion is because I follow the macro trends. I'll say, okay, Europe's in a really bad spot. The ECB is cutting has been cutting quite aggressively. The Fed seems to be holding their rates. The US labor market's a lot stronger. So I'm favoring the dollar over the euro. So I'm going to go and short Euro Dollar. And that could apply to any G10 currency. It could be, okay, this one's weak because of XYZ, this one's strong because of ABC, and I'll go and trade that one. Am I interested in Euro Australian sell? Not really, to be honest. I don't use Season AX anymore, no. I've changed the way I trade quite significantly over the past couple of months. In fact, I don't think I've placed a swing trade since September last year. Everything I've done since then has just been short-term mean reversion dollar cost average trades. So Euro Australian, I think we discussed this on one of the previous streams where I was looking at a long position. I'm not sure why I was looking at a long position though. Let me see. I don't think I can actually see anything that would make me want to go buy. Not really. I think we were just following the short-term trend with this one. Obviously, very clearly an uptrend on this H4. We broke above resistance. We had the break. We had the retest. So just from technicals, a long position makes the most sense in my view. But yeah, again, there isn't really anything that I can see that's driving this one. I'm fundamentally bearish on the euro. So buying it, for me, no, not really my plan. James, can you tell us your strategy? I'll be honest, I could sit here all day and try and explain strategies because I've got 3. So I've got the one that I show basically all the time on this stream, which is where I'll mark up levels and I'll follow the trend, or I'll follow the edge finder bias, whether it's long or short. And that's basically it. Very, very simple. Then I've got day trading, which is using statistical levels. So I use daily pivot points. I don't really do this anymore, actually, just because I don't need to. But day to day, I do mean reversion trading. So I'll wait for price to, well, if again, euro dollar, I'm only going short because that's where my bias is going. So I'm waiting for pullback. So I'm waiting for price to reach the top of a standard Bollinger Band, RSI to become overbought, and then I'll just click sell. And I'll do that as many times as I need to. So for example, I'm trying to find a place where I've had to scale in. Like here, I'm not sure how well you can see this, but I sold here at the top of the Bollinger Band, again, overbought RSI. We broke above again, so I sold again and then took profits when we had the drop. Now, I wouldn't recommend doing that because it's, if you're not following the macro trends and you're not really understanding what's driving the market, you can get caught in some pretty nasty trades. But yeah, that's basically just all I do. Oh, you told me it was bullish on Edge Finder. Okay. Yeah, to be honest, I don't remember. As I said, a lot of these streams sort of merge together into one. So what was I going to say? I was going to say something that I can't remember what it was. It seems like metals are doing quite well. We've got, actually I'll put it on screen here. So we've got copper, platinum, bullish reading. We've got dollar Swiss, very bullish. The Dow's bullish as well, actually. Nasdaq's bullish, dollar CAD. What else do we have here? New Zealand US dollar. Let's take a look at that one, actually. I've been wanting to go short on New Zealand US dollar for a while, but there's just been, again, no pullbacks, really. I suppose I could have gone short here, but I wasn't really around at this point. But yeah, it's tricky because these dollar pairs are very hard to get a setup in because they just seem to have very small sort of range bound movements and then they'll just drop. and then they'll range again, and then they'll drop. We're not really having a strong, clean, normal pullback. So yeah, there's nothing that I see on these pairs. Hello, James. How can we read news and hikes so we can decide short-term, monthly, short or long on main pairs? Okay, I kind of get what you're saying. So if we just had unemployment for the US, so what we want to do, the way you would use unemployment data, it's fine to say, okay, we just had bad data, I'm going to sell the dollar. Or sorry, we just had good data, so I'm going to buy the dollar. That's fine. But again, that's only a very short-term thing. So you're going to get in and you're going to have to get out until, when we have that correction. So what you really want to do to build a bias and take in day-to-day releases and say, okay, this is building an idea. You can use, obviously, if you've got Edgefinder, that's great because it's easy to visualize. If you don't, use Fred because that's free, but it's very, very annoying to use and collect data with Fred. You would go to, we'll just take unemployment. You would go to labor market data. You go to unemployment rate. And then you can see what is the trend of unemployment. Is it doing better? Is it doing worse? So unemployment actually hasn't been updated for today's release, which is fine. But we can say, okay, what was today's release? Let me just double check. It was, where is it? Okay, so it's 4.1. So it's ticked down. So we're staying relatively stable. It's 420, 410, 410, 420. It's just gone back down to 410. So labor market is okay. It's stable. So let's check NFP. What's NFP doing? Well, we had 12. Well, actually, it was revised, wasn't it? So we had 36. Then we had 227, then 256. So NFP is ticking up. Again, quite a positive thing. And then you take into account these data releases and you look at it in the longer term and you look at it through a it's sort of a trend. Like you would look at the market, you would say, okay, the labor market's trending to the upside, is getting stronger, or it's stable, or it's getting worse. And then you would do the same thing with another currency and say that's not doing so hot, or it's doing worse, it's getting better, blah blah blah, and you would slowly build up your idea from there. My current positions are copper and silver long. Forex gives me no setups at the moment. Yeah, the FX markets have just been pretty horrible, really, for the majority of traders, actually. Not in terms of trends, just in terms of setups, has just been non-existent, really. So what did you say? You said copper and silver. Let's take a look at silver. I would assume that you're long. I know I just read out the metals, but I can't remember what I said. Oh, actually, silver's bearish. So silver's got a neutral reading of 4, so it's not actually a bearish reading, but it does lean more towards the bearish side. However, copper's bullish. So interesting. I'd like to know what side you're on for the metals. So if we are looking to go short on silver, let's see here. Actually, this is quite nice. We've got quite a clean fib pullback here. Nice rejection so far. Possible short here. The trend is to the downside using the moving averages and take profit down at these lows. That doesn't look too bad, actually. Yeah, it really depends what you're doing, though. Oh, sorry, you said you were silver long, didn't you? I didn't read that. Well, I don't really see much for long, I'll be honest, unless we can see continue to the upside, moving average swap. But again, if you're using the edge finder, then that's giving you not so much of a great confluence for a long position, but there you go. Actually, I'm just gonna check schedule. Oh, interesting. I've got just about 10 minutes left. This has gone quick. So I've got 10 minutes left, give or take. If there's any questions, let me know. If not, I can keep yapping. It's no problem at all. Let's see what's going on in these markets. So what's going on with DAX? I remember I was looking to short DAX here. Luckily, well, not luckily, but I'm not in it. But it would have been not too bad, I think. I haven't checked this market since before Christmas. When was this? Yeah, it's back at the start of December, so it's been over a month since I actually looked at this. So yeah, probably not the best trade actually in hindsight, but I think the idea isn't actually too bad. Just selling the long-term weekly channel, maybe, we'll see. You move to LA? Definitely not. I don't think anyone's moving to LA at the moment. I think everyone's actually leaving LA. If you are in LA, I hope you're okay. Obviously, I mean that in a respectful way. If I didn't mean any disrespect by that. Do you swing trade? Not so much anymore, CJ. I'm more of a intraday trader, to be honest. I'll take a swing trade if there is a great opportunity that I see, but again, I don't think I've had a swing trade since sort of September last year. I'm using futures and COT data for my setups and only long-term swing trades. Okay, good. To be honest, I've seen quite a lot of optimism about silver. I can't remember what it was actually. Yeah, I'll be honest. I can't remember what was said. I just remember seeing some sort of higher price analysis by one of the banks. Why did I stop? Because it's just not as profitable as the way I trade now. Trading is for two things. You've got the main thing of trading is capital preservation, and then the second thing of trading is capital growth. So if I can achieve both of those in a more efficient and fast way, I will do it. Off the main, that is a really distasteful pun. I'll be honest. I got into an argument this morning actually on Twitter. It really annoyed me how many pets were left behind in those fires. I can't imagine that, because actually, I'm not going to go on. I'm not going to do that. So it's a long ramble for no reason. Pound Australian. Okay, let's have a look. Long-term trends are up. So we've got the weekly bullish, daily is also bullish here. H1 and H4. Well, actually, the H4 is bullish. The H1's bearish. So, let's see. I would really like to go long. I think, actually, you know what? Maybe not. Technicals look good to go long. And the reason is because we've got a really nice setup here with the previous structure. But again, with the recent sort of pound weakness, I'm just not really happy with going long on the pound these days. If we can see some sort of rejection here, and we can see some sort of any sort of increase in sentiment or bullish sentiment, I think this will be quite a nice position to be in. But at the moment, for me, there's just too much uncertainty around what is actually going on with the pound. Euro USD, where can a good pullback be? Yeah, Joseph, I'm very similar. I need to do a little bit more research into the pound at the moment. But yeah, I'm not very optimistic about it at all. So for euro dollar, I will be looking for just a correction of the NFP move, possibly back into this short-term resistance that we saw on the 30 minutes, and then I'll start selling again. But that's basically it. So normally I would have gone to the daily on TradingView. I would have done top-down analysis and gone through it properly. But, I've been doing that. As I said earlier, I've been doing that since September, and I haven't found any swing trades that are valid for the way I trade. So I've just given up trying to get swings on euro dollar and just doing day trades. James, I know someone who has a ranch in the area affected by fires in Los Angeles, and she managed to rescue all of her animals. Yeah, Lee, that's the thing. I mean, the situation, I get it. If you're at work and the fires came, you had no idea, and it was a mad rush just to save your own life. I kind of understand that. But, from what I've seen, there's a large amount of pets, dogs and cats just left, and it really annoys me. I don't think you should have animals if you're not going to treat them like family, if they're just there to be, you know, an object or to be cute and cuddly when you need them. I think it's disgusting. But anyway, again, I'm getting sidetracked here. I've got about 5 minutes left. Okay, so euro pound, tricky. I need to get out of this trade now. It's yeah, not happy about this. I've been in it way too long. The drawdown is kind of not good. Yeah, but there's nothing I can do. I suppose the only thing I could do is either wait for the next drop and take profits. Luckily, I've averaged in a way where I can get to break even. I could close out all my trades at this blue line. So I don't need much of a drop here. I need about 35 pip drop. However, if we continue to the upside, I'll scale in and I will be cutting this position here, this initial one. And I'll have to keep doing that until price is back on average. And what I mean by average is basically break even, and then I can start looking at how I can manage the trade to actually cover the previous losses. Hey, James, do you look out for declining open interest? No, to be honest. Again, COT data is really built into my swing trading, but I just not swing trading these days, so not really. I use COT it's a good way to get an idea of what smart money's doing, but you know, it does lag behind a week, and it's not something that retail can really benefit from without other layers on top of it. Eurodollar had plenty of swing sells from this week. I don't think you can have multiple swing trades on one chart in a week, can you? For me, there's nothing here for a swing trade. Unless, you know, you could argue these pullbacks here, and I wouldn't disagree, but I wouldn't say there's many or plenty. I'd say there's one here. There's one here. There's one here. And that's about it. I mean, this one's the wrong way around, and so is this one. But you get what I'm saying. There's 3 since, yeah, September. There's been 3 opportunities for me to get into a swing trade. And again, if I took swing trades, I might have made, let's be generous and say maybe 8 to 9%. And again, I've doubled, almost tripled that by trading the way I have been trading. So James, and how do you look for liquidity in the market? I don't do liquidity, all that stuff. That's not my style. It's just, yeah. Alon, all my social media is in, it's just my name. It's Forex, XX, James, SS. It's Twitter, YouTube, Instagram, all my stuff is the same. Waiting for Eurodollar around 0.99. Do you mean to buy or to sell? I think all eyes really are on parity for Eurodollar at the moment. I don't think anyone's really paying much attention to anything else. Why such a big NFP report not really moved the markets? Well, give or take, it kind of did. Let's see. I mean, it's not caused huge movements, but it wasn't a huge release. I think a lot of investors are being quite optimistic about the US dollar at the moment. I don't think it was a huge shock. You know, depending on what source you use, we were expecting around 200K. We did overshoot, which is good. But again, it wasn't really like, oh my God, NFP is amazing. We need to all buy the dollar now. It's just, that's good. Cool. That's just my view, of course. You know, I'm not always 100% right. CJ, I've already answered the way I trade about 4 times in the stream, buddy. And I've got about a minute and a half left, roughly, so don't have time to do it again. Okay, so you want to buy Eurodollar at 0.99. I don't see a reason not to be honest. As long as you're willing to or as long as you're aware that price could continue lower beyond 1.0 or parity, because although parity is like the key level, that is the main level of euro dollar, really, it can go below that if things don't start getting better, either worse in the US or better within the Eurozone. It's not, not unheard of for us to come down to, 0.95. So you might have to take a few trades, but eventually, if you take enough positions, one will work out. But of course, that's not really the way you should approach trading. JPY just made a massive push up, which supports my pound yen sell. Yeah, it is making quite a nice move, actually. Gold's up as well. Seems like we might be having a little risk off going on here, although the dollar's not really reflecting that. But yeah, yen and gold are up, which is interesting. So you're in pound yen sell. Let's have a look. To be honest, I'm a little bit jealous of that. That looks really nice to be in. We do have a very minor support level here on the H4, but to be honest, I think we could possibly break that, especially if the yen continues with some strength. Yeah, actually, Marcus, that's true. We do need to see what happens with the dollar here at 110. It is a pretty major level. It's a nice round number. It's a strong psychological level. So yeah, we'll see. It's not quite the same as 107, but yeah, we'll have to see. It might be a similar situation where we take a little while to sort of break and hold above. But again, if we see the dollar continue to be impressive in terms of the data that's coming in, I don't really see a huge issue there. The website to see the Fed is this. So go to CME Group or just type in Fed Watch Tool, and this will come up. So the way you use this is basically use this chart on the top. These bars are nice, but to actually understand what you've been told. So an ease of 2.7. So there's a 2.7% probability the Fed will ease, obviously cut. There is a 97.3% chance they will hold their rates. This is what no change means. And a hike is obviously a rate hike. There's a 0% probability of that. Andy Swa, you have a good day too. Thank you very much. Prince of Forex, buy S&P now. Why? If you could drop in the chat why you want us all to buy, that'd be great. Inside info, I'm sure it is, my friend. Anyway, guys, that's me done. Chris is here to take over the show. So thank you all for having me. You've been great as always. Have a good weekend. I'll see you all very soon. Stay safe.
Hey everybody, thanks for tuning in to today's A1 trading session. We love engaging with our audience, talking shop, taking requests, and sharing our favorite setups. It's about that time where we're going to review a bunch of indexes, stocks, currencies, gold, silver, Bitcoin, and pretty much anything else and share our insights. If you're wondering what trades I'm in, if you're wondering what trades I'm taking, and you'd like to see exactly how I'm trading everything, you can actually follow my trading signals. If that sounds like something you're interested in, we'll share a link in the chat. You can sign up. You can sign up directly with the link or speak to a support rep if you have any questions. If you're asking, what do I trade? Pretty much everything. Indexes, ETFs, stocks, options, futures, Forex, and crypto. Thoughtful analysis, active trading. Check it out. And now, back to the show. What's happening, everybody? Happy Friday. Welcome to the non-farm payroll bloodbath. S&P's down 1.6%. Q's down almost 2%. Dow is down 1.3%. Russell down over 2%. Mag 7 is down. Volatility is up. Dollar slightly stronger. US 10 yield slightly stronger. Oil up to $76. Oh boy. Oh boy. So a couple things to take in for today. Here's a recap of the non-farm numbers. Came in 256 over forecast of 164, but the revision was negative from 227 down to 212. A lesser, so 4.2 came in 4.1 with the unemployment rate. Average hourly earnings came in 0.3. CAD numbers came in pretty positive. Let me take a look at the currency market here in just a moment. But the big thing that I'm watching is this 10 a.m. news for the consumer sentiment. Lesser. And the inflation expectations higher by quite a bit, actually. So here is where I think the market is thinking about stuff. Right there. So the 1-year inflation expectations just went from a 2.8 print from the previous to 3.3, and the 5-year inflation expectation went from a 3% to a 3.3, both higher. Next week we have CPI and we have PPI. Again, we'll see what the true data is. I think James was talking about the probabilities of rate hikes. I don't see it on the watch tool at all, but if we go to probabilities, what the market is looking at, and this was weird. I was in a session earlier this morning. The June FOMC rate decision was actually paused and not looking for a hike or a cut, rather. So right now the probability is still, it's more of a coin flip. You can see here that if you go to June, so I'm looking at this number right here. So June, we have a 42.7% chance that there's going to be a 25 basis points cut, and we have a 41.4% chance that there is no cut. So I think we could say that right now this is a coin flip. This is a 50-50 coin flip, and it's technically like 42 and 42. So it'll change as we get closer to it, but I think it is pretty safe to say that right now there will be no cut at all until, if at the earliest, probably June. And next week's data is going to be really important to see, and I don't know if they're going to fudge the numbers or not, but I don't think we have a forecast for next week. If we go to, I think Tuesday is PPI. Okay, so we do have forecast for PPI. I want to see what it looks like from the economic calendar on Bloomberg as well. So Tuesday, we go to next week. And let me get some comments here. Okay, David, I'm not with MTI, man. I'm not with MTI. I'm with Prosperity Pub and with A1 Trading and my own stuff. All right, let's go next week. If you'd like to, so if anybody wants to join, I've got a Telegram channel, I've got a Discord channel. If you want to, follow me, see what I'm doing, it's all right there. So let me share. I'll just do a one day link for my Discord. Chris Pulver Trading invite. Let me do a 1 day link here. So for 1 day, Chris Pulver Trading Discord. Nope, don't post that. All right, my bad. I didn't mean to post that. There. That is my Discord. So that is where in my channels, I've got free group chat, any assets, Forex, stocks, options, futures, anytime I go live on YouTube, a blog that I post typically every week or more, anything on Twitter, any analysis is interesting, private instruction, affiliate discounts like your Edge Finder, some software that I use that helps me trade, and real-time news, all that stuff. So I keep my channel pretty clean. I don't like a bunch of like sub-threads. I don't send friend requests. I don't send direct messages unless you direct message me first, but you can find me every day in the free group chat. Okay, so anyway, easy way to follow me. All right, let's go to next week. Let's go to next week. What are you doing there? There we go. I'll just go the whole week. There. Apply. All right, let's go to Tuesday. So Tuesday, 8:30, we have CPI year over year. Okay, interesting. Is that right? CPI year over year previous print was 3.4. Yeah. That's PPI. Okay. So is that right? Previous print was 3.4. They're forecasting 3.2. So an improvement, maybe. PPI year over year, 3%, 3%, month over month, 0.4 to 0.3. So the forecast, according to next week's Bloomberg economic calendar, is that there's going to be a slight improvement from the previous print in producer price index. We shall see. Wednesday is probably like the big headline that everyone's looking at. Here is your, there's CPI coming out of UK next week as well. And let's get into the 8:30 news for the US. And I don't have anything forecasted for CPI. So I've got month over month forecasted for a negative print. Year over year, there's no forecast. Core CPI, there's no forecast. CPI month over month, 0.3, 0.3. CPI year over year. This is going to be an important thing to watch. These two right here. Watch this and this. Okay, you can get this. You'll see this on the Edge Finder next week as well. But is the inflation news looking better? We don't know. We're going to find out next week. Okay. So for today's price action, we're right back into the tests of the levels that I said you got to watch for it, right? If we have support and resistance zones, we have support from PCE. This was the FOMC low right here. 2 days later, we had that gap lower that started the holiday rally. So we have the PCE low right here. We had the retest of that during the holidays. Today, we're retesting that through non-farm. Now, we did gap lower. We've already had like a 100-point day on the S&P. That's a pretty decent amount, right? S&P's down 83 points. We had like a high to low so far. Here's my SPX. This black line is that support line that I was talking about. I don't think that we come back and fill today's gap. I think that's a long shot. There's like a 20% chance we fill today's gap. So that's like unlikely to happen. But I would say that from this close yesterday to open today and that flush down, getting a pullback here and settling in, like closing above 5,800 would be, the market just kind of defending a support zone, right? Testing, but we're coming right back down to the daily 100 moving average. So if we're testing and there's a little bit of buying there, or the market's not quite ready to see that the damage is being done yet fully. I mean, if today's candle were to close not only below the PCE low, but below the holiday low and also below this 100, well, then I would be looking at this as just path of least resistance is now to the downside. Unless there was like a big snapback candle, getting some additional trades to close out. Okay, I'd set a trade close out for profit. Let me find that, track that. That was another trade on the SPY that closed out today. What one just closed out? So 550 and 555. Okay, so that was $1.06. Got it. 615, 620. There it is. Got it. Okay, so that was $1.26 closed out for $1.06. Perfect. So that's a little winner chicken dinner. Okay, I'm gonna do a quick update. This is a service that I have. This is now 7 for 7 in the last 2 weeks. Not too bad. Seven for 7. And let me just do a quick update here. That was a SPY trade update. SPY 214 expiration, 615 by 620. And the 555 by 550. That filled for $1.26. Profit target hit today. Good. Okay. Market's down. Portfolio's down. I've got hedges. I've got collars. We'll see where the dust settles. I do want to take a look and see what do I have for 0 DTE today. Today, I have some SPY trades. This should be, I got a collar trade in here. Very nice. Okay, cool. So I've got one of my clients that has some SPY. I don't have any other 0 DTs in that account. That's good. Any 0 DTs in this account? Only a couple. So Apple, son of a biscuit. That's a losing trade. SPX, 0 DTs. These one of these could be closing out today for hopefully some profit. We'll see. SPY, that's out to 7 days. All right, so Apple, that's going to be a losing trade. No big deal. This one. So I want to have a look at this. So I have some shares right here. Have some shares, have a collar trade. This is why I'm using the collar trade. Let me double check. So I've got SPY. This is going to be some tracking. 111. Okay. Waterfall. Short term. All right. So I bought. Let's see here. NVIDIA. Sorry, I just got to find the tracker. I saw this question yesterday. Chris, how do you keep track of all these trades? Because I've got a crazy long spreadsheet that has like thousands of lines in it that I've got to just do a control F and search for it. But I'll find the trades. SPY. Waterfall and ownership. There we go. Okay, I got it. Here's the trade. So 599 was the assignment. So I did a 599 by 598 for 35 cents credit. I closed out for the contracts for a loss, which was about $260 on the loss, and I'm keeping 100 shares. The debit side, so I did a collar trade, added a collar trade for 45 cents credit. I did a 598 sell call by a 590 buy put. I want to see what that buy put cost me. So the put was 457, and it should be trading for, well, no, the put was 412, and it should be trading for like $8 or $9 today. I'm going to close this out. Let me see what this is trading for. So 412. Let me update this. This is the beautiful thing about tracking all your trades. With options, you got to track them manually. Unfortunately, I've yet to see a broker or a piece of software that tracks all of your debits and credits. So I make the old boring spreadsheets and do it that way. So the 590 put is 4.112 debit. And if I close it out today, which is today is the expiration, I can get $8 and let me see if I get $8.50 for it. So $8.50. See if I get $8.35 for it. How about $8.30? All right, I just closed it out for $8.30. Now, what this also means, I'm going to look to roll. So my 598 call is in pretty much full profit. Let me see. This one could probably close for like 1 cent. Yeah, that's perfect. So I'm going to close this down today. So close this out. Okay. So I've got a collar trade in. Let me do some math on that. All right. So 412 debit closed for 8.30. So that lowers my cost basis again. Update collar. So I gained an extra on the put side. I gained an extra. So 8.30 minus 4.12. I gained extra 418 on lowering my cost basis. So gained 4.18 on long put. So that brings my cost basis down 594.39. I own the SPY now at 590.21. Now I'm going to put in another collar trade. Okay, so I have the shares. I closed out my collar trade. I'm going to put in a new trade. Now I own the shares at 590. We're trading at 581, right? So I'm technically upside down a little bit on the SPY, but I'm going to protect the position. I'm going to go out another maybe 1 or 2 weeks and throw in another trade here. So if I go out to next Friday, my break even is 590.21. So I can get some profit on that. I'm probably going to go out a little bit farther. Let's go out to the end of the month and see if I could do. So for 590, I could repair this one for like $5 to $6. I'll go 590 here. I could go, deep in the money as well. All right, I'm trying to make, so here's the deal. I'm trying to make up for a $260 loss by repairing this stock. if we get up to, let's say 589, and then I collar this thing. So if I get it called away at 589, I'm going to grab, so 590.21 minus 6.24. That brings me down to 583.97. I get it called away at 589. That gives me $5.03. So that would make up for my loss and give me net profit. I'd obviously like to go for a little bit more profit than that. Maybe I bump this up. So I'll bump up to 590. Now on the put side, I need to buy a put and hopefully not have it cost me an arm and a leg. So I'm looking at about $8 up on the call side. So if I did roughly $8 to $10 lower, so 82 to 72. So I can still make about 45 cents net profit, have it protected to the downside, have it called away, $8 higher if the market pushes up. I can also roll this one. If price snaps up to 590 or so, I can have that rolled. So let's see here. I get more premium there. Let me do the numbers. So I've got it at 590. Grab a net credit, 590, get it called away. I need to go up here. So I'm going to go 590. Let's go a little bit lower. 570. That's about $12 lower on the put side and about $8 higher on the call side. Still get 80 cents of profit. All right, I'm going to do this trade. So 80 cents. See if that'll fill. 83 cents. All right, I know I'm walking through a bunch of this stuff, but here's how it works. So 590, added new collar. It's a 131 expiration. And my put side, so I did a 590 sell call and a 570 buy put. And I need to know the debit of the buy put because on the protection side, that was a buy put for $4.80. I'll double check the exact fill. Let me check the history real quick. So that put was $4.79. Okay, 4.79 debit. All right, so now that trade is in, and the collar should be January 31st, 570 and 590. That was filled for 83 cents, so I can lower my cost base a little bit more. So now, new break even, 590.21, 590.21 minus 83 cents, 589. All right, so 589.38. Okay, so 589.38. If it gets called away, fine. I will end up looking to roll that 590 as well. So I'm going to keep an eye on this one for the next couple of weeks, going out to the 31st. This is going to be out 21 days. I'd like to keep an eye on that one to possibly roll that 590 and just roll the collar a little bit. So I'll just keep like massaging that position. All right, that was just something I had to handle and take care of. Overall, like pretty big swing in P&L today. This was, like -17. Now it's -8. So it went from basically flat to $7,500. MicroStrategy still looking to get this one called away at 305. This one's out to the first part of February. NVIDIA, let me change this back to symbols. I know that I have some shares of MicroStrategy. I have some shares of NVIDIA, Microsoft, some ratio spreads. NVIDIA, if it gets called away, let's see. I don't have any shares there, but I have shares elsewhere. How do I not have shares in NVIDIA here? Ratio spread. I think that was because it was in the middle of a transfer. NVIDIA. There we go. So there's the shares. The 130 by 140, we're trading at 136. That one's out a little bit farther. Anyway, let me get some questions. So far today, market's looking pretty good for defense, right around that market maker level that I talked about in one of my earlier sessions. 5,800, I thought we'd be defending. Is anybody surprised that these lows that we talked about all week, that the market is responding to them today? I'm not, especially after the market gapped lower. So this is SPX this morning. This is where we closed yesterday. We opened today. I was looking at this as a high probability of a no gap fill. Like based on the size of that gap, I didn't think we're going to fill it. I was looking at market maker levels down here to be defended, and that's exactly what's happening so far. So hopefully it stays that way. I have a trade in that looks like this. It's a broken wing butterfly. If price is greater than 57.95 today, then I will keep 75 cents a contract. If price is at 57.95, then I will make $5.75 per contract. That's my pin price. That's very hard to do, but so far this market is being cooperative off that support level that I talked about. So that red line is my support level. This line here that's dotted is my support level. If we're not doing any technical damage to it right now, then we're still in this range that the market is waiting to see. Like, okay, is it, PPI next week? Is it CPI next week? Is this what's going to be like the big flush down? We still have Trump's inauguration on the 20th. Who knows? But trades are still closing out, working out pretty nicely. Yep. And the 10 years up. I get that, Kevin. That's a good point. I've been talking about it for the last couple of months. It is still going higher. It is a problem, right? So let's go top down here. S&P reducing a little bit of the down today, 1.2. Nasdaq was 1.9, almost 2%, now 1.3. Dow is down about 1.3 still. Russell was up to 2.5% or like 2.25%. Now it's 1.9. So the market's responding a little bit to an intraday bounce. Volatility is still up on the day, up a decent amount. But, is this like a big volatility event? No, this is just higher volatility. SPXY, not really that interested in buying this thing yet. I want to see if we get like a bigger dip in SPXY before I take some plays there. Dollar index still going higher, not a surprise. This is a surprise to me. That is a big, huge spike in oil today. Wow. So this, again, this does not make me think like I want to buy oil now. No, I don't. I really don't. This just shows that, okay, the pressure that the bulls were creating is now for real. Like they're exploding this thing to the upside. Unless this gets faded really hard, right? Unless this gets faded really hard with a candle that looks like a big fake out, right? If today's candle on oil closes like that, then I still think it's a potential fake out candle. But if it holds here, we have this little indecision and we squeeze through it, then I would now say that if oil is testing this high or clearing these highs, that a push up and any pullback is possibly offering a buy the dip. Okay, I'd still want to use a stop loss. I probably won't trade oil, but if you're long it because this has been the early momentum, it's working out pretty nicely. But if you're long oil, I would have stop losses to break even or better, and I would just be trailing this thing. Like I think oil is going to be pretty jumpy. So it obviously like squeezed through these last 4 days of indecision. If it stays above the 200 moving average, then I think we are in a bit of an uptrend to see oil pull back and get into the maybe high 70s, maybe 80s. Who knows? Again, not looking good for inflation if that's the case. So NG, nice rip on natural gas. My big gap here, 5 to 23. I've got a $23 call on natural gas. It's obviously a bit higher, but that's an income play out to April. Gold, nice little move on gold, staying bid off that 100 moving average. I'm not gonna complain if oil or if gold is going back to highs again. I'm not gonna complain. I still don't think we make this breakout to 3,000 or so. But I think we could get back to like 2720 or so. I think we can get back to that level. So in the near term, I could see gold getting back to like 2,700, 2,720. It's almost there. But anyway, I don't think we have a big breakout on gold. I think we still have some noise like this. I think if the indexes are still kind of choppy between the holiday highs and lows, keep an eye on it. Okay, did I have some profit finally hit on my freaking dollar CAD? Let me check those real quick. Dollar CAD. Just trying to hit 44.80. Dollar Swiss. All right, we're getting close to my take profit on dollar Swiss. This is 1, 2, 3, 4, 5, 6, 7, 8 positions long on dollar Swiss. Let's go. I'm pretty close, only about 38 points away, 38 pips away. All right. Gold. I mean, if you're long gold, that's great. I'm long gold. I don't have any futures trades on anymore. Those are all expiring, or those all expired in 2024. I'm just trading GLD for right now. I've got some credit spreads. I own some shares. GC. I'm actually better off. Well, maybe not. I'll wait on gold. I was gonna say I could probably put like a 1-1-1 trade in gold. But if this thing like turns south quickly, like I don't know. Let me take a look at it. Let me go GC for a second. So GC trade. Really? Like gold contracts, I can go out to April. It's not great. April 24. 2,500 or lower. Let's see if I get anything positioned around like 2,500. So delta wise, if I did a 25, we'll see what the price looks like. 2,500 by 95. And then as long as I can cover 40 cents here, which is pretty easy. Could I do 2,400? Okay. So that's $400, but I need to offset that with like an out of the money. So at 2,300. Move this down. Now there's just a lot of risk in the futures trade if I don't do it right. So $1.40. It's essentially a 1-1-1 trade. I can bump this up. I can probably go to like 24.50. I mean, that's not a bad income trade. So it takes $1,500 of buy power. There's a 91% chance of profit on this trade. I get $370 by April. It's just, I don't know. That risk is there. Like if gold does something really crazy to the downside, 24.50 would be right here. I would have risk in the trade. There's no way I can really. I mean, I could roll. I don't know. I'm gonna stick to silver for right now. It's tempting, but anyway, silver. So gold is performing well. Silver is also like matching. If we look at the two, I'm looking to see if one gets the upper hand. So if this chart, this is gold versus silver. If this chart goes down, that means that silver is getting the upper hand and performing better. But the nice thing is even though this is a multi-year range for gold versus silver, both assets have gone bullish. Like both assets are pretty postured for good gains to the upside. So even if this one goes down, I mean, if you're playing like allocations of both, it just means like, okay, so maybe you can get a little bit heavier on gold if we come down to the lows, or maybe get a little bit heavier on silver if we come back to the highs. That makes sense? Yeah. Why is oil roaring? I don't know. I mean, I don't know, because it's not official that we're drilling, and also like inflation numbers and inflation expectations are showing higher, and we've seen the pressure on oil too. So, I mean, we could look at oil and see if there's any news. U.S. sanctions prospects, sanction fears. Okay, so that's another thing. It's like we've got tariffs and sanctions. I mean, there's a lot of geopolitical manipulation in oil, right? You've got basically OPEC versus the world. You got Saudi Arabia, you got the US. Supply and demand is always a thing. Inflation and energy prices, gas at the pump, all these things factor into it. I mean, look, we had I mean, how many decades have we had wars in the Middle East or conflicts in the Middle East, or it's hot spots in the Middle East, and oil prices are always like the ransom. So it just makes it crazy to trade. So, I mean, technically, look, it held support really nicely since 2023, and it held that support again. I've just been saying that if this level is holding, then this is not good for inflation. Higher energy prices are not good for inflation. Next week, we're going to see what the data actually shows us. Can the market see a better print in inflation, or is it just still sticky, still high? Fed can't cut. Fed stuck between a rock and a hard place type thing. We'll see next week. Okay. All right. So silver, gold, I still like. Bitcoin back up to 94. Even though the markets are down today, this is an interesting move. So markets down today, still in the red, right? They're retracing a little bit. I mean, pretty easy, right? Like Nasdaq was down over 2% or about 2%. Now it's back up to like -1, -1.1. So there's at least a bounce off support, which is what I talked about all week. Bitcoin still holding this support level. If we break that level at 91,466, then I think we pull back into like the, let me measure this real quick. Let me get like a symmetry measurement here just in case. I mean, this could be like surprisingly spot on as far as the technicals go. So if we go, that would be a symmetry measurement down towards around 86,900. And that gets us between the 38 and the 38 and 50% fib. So I could see this level being like a potential buy zone. I'll just call it, I'll leave that box there. But I mean, if we have a level around 87K, I'll just put a note here, like 87K is a measured move. And if we go a little bit lower, just look at your dynamic support. The 200 moving average is around 79K. Like I'm okay taking positions there if either one of these two levels are hit over the next couple weeks. I would still be looking at buying dips on Bitcoin. Okay. MicroStrategy has chilled out a little bit. I can still get it called away for a couple of bucks. 305. This one's out to the first part of February, so I got to hang on another couple of weeks. I might, let me see here. I might roll this again. Let me see. Let me look at MicroStrategy. If it's worth it, MicroStrategy. So my 305 is in the money. My 245 is out of the money. I'm collecting like a decent amount. Let me see if I can do another roll on this. So if I roll it out another week and keep the exact same strikes, I get another 250 bucks. It's not bad. Could I roll this up? Nope. So if I roll it up, it's a debit. If I roll it down or keep the same strikes, I get a $2 credit. Let's see. Maybe. I still have 28 days in the collar. I could throw it out by another 7 days. Grab another 200 bucks. I mean, it's not bad. At this point, like it's going to be difficult to get my calls. Like if price stays where it is, on MicroStrategy, like it's going to be difficult for me to get this to not get called away, but that's okay. So what I'm looking at is if it's going to get called away with a fairly high probability, I might as well give myself another week. And if I can add another $200 a week, I mean, if I rolled out another month, I get another $800. And I think I have this in like 4 accounts. So if I get 4 accounts, another $800 of profit on top of the $1,700 that are currently sitting there. So that gives me basically $2,500 per account. That's another 10K total position. And I just have to kind of massage it like week to week. So could I get filled on a roll for like $3? I mean, maybe. What's the big monthly expiration for February? February 21st is going to be the monthly. We have earnings also on this one. Oh, interesting. Yeah, I think I do want to roll this. Let me see what it looks like if I roll it out to the 21st. So I roll it to the 21st. I get an extra 3, 6. I think I'm going to do this because that way I've got a put that at least at $11.05 on that put, I can track that debit. And through earnings, if we have like a terrible earnings in MicroStrategy, if I can get this put to, increase, I mean, I don't really want it to, but if it increases in value, I can still lower my cost basis. Let me see if I can get $4 for this roll. $4 for the roll, go out to the 21st. Not filling there. Let me try 375. Okay, let's try the mid price at 365. Got filled for 366. All right, what else has MicroStrategy? This account has MicroStrategy. There. Let me take my collar trade. Let me do a quick roll on this. Roll this out 2 weeks. Keep the strike prices the same. What the fudge? I just got filled for 366 and the mid price is now 5 and change. Like, what on earth? Well, that's annoying. Well, I can do this here. Oh, the 20, I can roll back a week. Back a week. There we go. 390. Okay. This is more like it. Let's go 390. 380. Mid price is $4, man. 375. It's probably going to be around the same price I got filled on last time, 366 or so. 370. Son of a gun, 365. This is the fun part about like some of the bid ask being a little bit wider. All right, 365. There. Okay, right here. Here we go. Last one. 103. So there's my 305 and 245. Do a quick roll. Go out to the 21st. 3.65. 365. Okay, so now do a quick roll on MicroStrategy. Tracking this bad boy. So I own it at 288.47. Where did it go? Okay. So just some old school manual tracking. So update, new collar with a roll. The 221 expiration, 305 by 245. The 245 put is trading at around 1120. Put, I got filled for a put at 1093. Okay, that's good. And on this account, uh, 365. So now I have a 345, 245. Cost price, yeah, about 1090 on that put. So 1090 to $11. Debit. Pulled in 365 credit. So now my net break even is 288.47 minus the 365. I own MicroStrategy at 284.82. 284.82. So if it gets called away at 305, I make $20.18 per contract. I make $2,000 on those accounts. There's $6,000. Okay. So out a few more weeks. No big deal. I'll keep an eye on it. Okay. Not bad. Not bad. What else? Coinbase. Anything I like here? This trade should be closing out next week. This is a 111 income trade. It should be looking pretty good for full profit. So coin right in here. Or it was. Did I close it out already? Let's see. What happened to my Coinbase trades? I must have closed it out for profit. I think I must have. Let me do a quick history check. Or it could have already expired, but I'll find out. Coin. Last, let's say 30 days. So on the 3rd. Okay, so I closed it out for profit on the 3rd. Got it. All right, so that one's closed out. Do I like this enough to do it again? Let's check the IV on Coinbase. This might be a new trade for us today. I'm good with that. So IV at 34.8, not super high. We do have earnings on the 20th. Would there be a spot that I'd be interested in owning some Coinbase? Well, probably in the Like this 111 trade was back down near these lows. I would think, I mean, this is going to be a riskier trade for sure. A 111's not bad. I'd be willing to take on some shares because the premiums are pretty darn good. But if I'm going to take on any shares, I could look at a ratio or a 111 around the 150, let's say 155 or 150 zone. That would be a pretty healthy correction from the all-time highs. 147. I mean, actually, it's not all-time highs technically. So I guess the question is this going to continue to work up? Are we making, higher highs and higher lows? Is this going to be like a nasty correction? Is this going to be crazy volatile? Is this going to give back a bunch of gains? I mean, this is another stock that I would be confident that if I take on any assignment, which I would intend not to, but if I took on any assignment, I could repair it. I'm pretty confident I could repair it. So anything in like the 150 zone would actually look pretty good. So if I wanted to say, okay, through earnings, 42 days out, we've got earnings on the 20th. We got a 21st expiration. I could go here right at earnings. I could do a ratio spread, the 155 by 150, 86 cents. I don't love that at all. Let's move this up one strike. $1.62, and I could own the shares around 150, which isn't a bad spot. So if I own the shares at 150, that would be right back to these September lows of last year. It's not a bad spot. Not a bad spot. So income-wise, that's only out 42 days. I would take this trade. I'm willing to own the shares of Coinbase, and the reason why is if I went out 30 days, 35 days on an at-the-money covered call, you're going to get like $20 to $25 on a covered call. So even if I took the shares, I could lower the cost base very quickly over like a 30 to 60 window, probably lower the cost base by like 40 or 50 bucks. So it's not that I'm worried about repairing the stock. Obviously, if I own shares, I'd have it protected. I would put a collar trade on it. But I'm going to look at this trade through the 21st. The 160 by 155, I get $1.62. Just an income. There's a 93% chance of profit on that trade. It's only going to tie up about $1,800 in buying power. Could I go 165 by 160, get a little bit more bold? There's 200 bucks, but now it's a 92% chance profit, ties up a little bit more capital. Let me try this. What is a, let me delete this. Let's go 160 by 155 by 150. So now my assignment price would be 150, take off the 5. I'd own it at like 144 and change. I only get $100 of income with a 97% chance of profit. I mean, I like the probability, takes up less buying power, but it's only 100 bucks of income. If I delete this leg, double up on the 155, I get $1.35. Probability goes from 97 to 96. I mean, it's extra 30 bucks. Choices. But break even wise, the break even, this is probably the most important thing. If I took the assignment, if I buy that, sell that, my break even would be, and I think I'm going to do this. I'm going to go 2 contracts so I can make $212. And if I own the shares, I'm going to try to repair it for, instead of making, typically I like to repair for like $1,000, and I do like these quick flips of like $1,000 profit. I'm just going to try to flip it for $2,000 if possible. So I think I'll do this. Buy power is pretty cheap. $212 is income with a 97% chance of profit. These deltas are crazy low. This is like a really, I mean, the chance of assignment's like 2 to 3%. So just on income alone, I think I'm okay with the trade. All right, I'm going to take this trade. So this will be a new one for Coinbase. Where are we at here? Coinbase, new trade. I'm going to buy the 160 put, sell the 155, and sell the 150. I'm going to do it for 2 contracts each. If I just put this in, this typical trade would be a 1-1-1, right? So you buy the 160, 1 contract, you sell the 155, you sell the 150. I'm doing this trade with the potential of owning it. All right. So there's a 3% chance of assignment. So it's going to start out as just an income trade to make $106. But for me doing 2 contracts, I make $212. That's fine. I do that in the next 42 days. We do have earnings. Okay. So right through this, I'm going to have to hold this through earnings, and that's okay. Because if earnings does come down to give me an assignment price, I'm going to quickly repair it. but I'm going to do this for 2 contracts. So for this, see if I can get at the mid price at $1.06. That's pending. So $1.06 not filling. Hopefully it stays over $1, $1.05. My gosh. Give me at least $1, would you? $1.04, $1.03. The bid ask is pretty wide. If it's less than $1, I'm not going to take this trade. All right, well, cancel that because it's not filling me. Even at $1, I'm not getting filled. All right, let me try that trade again. Let me go. That's the monthly expiration. That should be like the most liquid. Son of a gun. Maybe I have to go up. So I buy the 165, sell the 160, sell the 160 or the 155. It's the same trade. I just moved the strikes up. Now the bid mid ask is still pretty wide. Let me see if I can get this one. Now the ownership, if I got assigned, it'd be 155, 155 minus 5 minus the $1.07, 148.93 be ownership price. I'm comfortable with that. 2 contracts, $1.07. All right, let me finesse this down to $1. See if I can go penny by penny. Come on, Coinbase. Give me some liquidity. There's open interest there. Like there should be fills. All right, just got filled for $1.03. Okay, so got that account in. Filled. And filled. Okay, so new account, new trade. This is a 2/21 expiration. It's I guess technically it's a 2/22 trade. So I'm buying the 165 put, selling the 160 put, and selling the 155 put. Pulled in $1.03 credit. I'm doing that on everything's 2 contracts. So I get $206 on credit. I have a 96% chance of profit. So I'm just getting this all typed up in my spreadsheet, and I'll post it in the poll alert section for trading A1 Trading Discord. 96% probability of profit, about a 4% chance of assignment. $206 on credit, willing to own, and the break even if I own it would be like 148 something. So 155 is the assignment price, minus 5 on the bear put spread, and then minus the 103 that was filled. So 148.97. Okay, so that trade is in. So I can move this down here. Actually, I'm just going to delete this. Let me go to the box. So 165 by 150 in this area there. So that trade, I took profit. I must have taken profit on that one. Yeah, I think this was 395 trading down for like less than 30 or 40 cents. All right, so new trade. This is a 2/21 expiration. Buy the 165 put, sell the 160 put, sell the 155 put, $1.03 credit. Willing to own 148.97. Break even. There. Now I got a screenshot. I'll post that in the chat. Okay. So some action on Coinbase. Cool. I closed out EETH for profit. The 60, it was the 60 by 40. I closed out for profit. I still have a 45 by 35. I'm just going to let that one expire for next Friday. Copper got a big old rip today. That's interesting. Nice. Is China getting a big jump? HSI? Bueller? Anybody? Nikkei? Little red? FXY? Should I have been trading Japanese yen futures? I missed my window. Not really. I'll keep an eye on it. DAX, FTSE, Argentina. Give me a pullback, Argentina. Nope. China's down. Back to the 200 moving average. Brazil, maybe coming back into COVID levels. Mag 7 down. Jeez, oh Pete's. This is why I put collar trades on everything, just in case. Meta, like to see a bigger correction there. Microsoft working its way down. I've got a bunch of these trades on a Microsoft. This is the trade we added in this week, the 380 by 375. I'm good with all these. I think I'm good on Microsoft. If this comes down, I actually might just buy shares. If it comes down to like $400, I might just throw like a $1,000 or $2,000 position at it and just dollar cost average. I mean, this is stock I wouldn't mind holding if it's like range bound, fine. So anyway, or just play the incomes here, like month to month. Netflix, this is a nice drop on Netflix. This is why I've been waiting patiently, because I was like, look, we're way overstretched. We got so far away from the 200 moving average. We got a crazy high bar count. I think we're going to pull back and try to find some, like 100, 144, 200 EMA support. NVIDIA still hanging out at 135. Not a surprise that we had like a poke and fake out at the highs. I still think this needs to pull back and find like the 144 to 200 moving average. Tesla, 390. I still haven't been filled at my dollar cost average levels. I do have some income trades ratio spread down here. 360, 250, and 285. Those are just $1,000 positions, like $1,100 and $1,500. Berkshire. Oof. Berkshire getting the burn today. 442, I've got a ratio spread, 415 by 410. If I owned some shares of Berkshire, that would be the 410 assignment. I'd own it at what? It'd be like $400. I would own Berkshire at like an 18.25% discount. I mean, I look at that as kind of similar to saying, would I own the S&P like 18% lower? I would. So Berkshire to me is that trade. Now it may not be assigned; it's still like very low probability of assignment, but you never know. Bond wise, short-term bonds down today. We're at fresh lows on the 7 to 10 year, and we are at fresh lows. Even though it's a green candle, we're at fresh lows again on the 20 year. The 10 year continues to push higher. This is the chart you have to watch. This is more pain ahead. If we're above 5%, get out of there. Don't change that. If we're above 5%, I think something breaks. So keep an eye on the frog in the pot. The 10 and the 2 year disinversion continuing harder. The 10 and the 3 month disinversion continuing harder. Mortgage rates climbing up by 2 bips. Let's see here. Junk bonds. This is just measuring credit spreads and liquidity in the market. It is not quite as ugly as what it was during FOMC, but I'm going to keep an eye on this one. Let's have a look. China stocks. China stocks keep dropping. Alibaba down to some fresh lows. Baidu down to some fresh lows. Son of a beaver. Baidu, you piece of crap. I just have some shares in Alibaba and Baidu. Collars on each one. JD, I'm repairing this one as well. But I might just end up looking to do a roll. I'll take a look at these. Are we down on SCHD? About the same. Let me go to the how many stocks are above the 50-day. About 25% of the S&P stocks are above. I'm looking to see if this gets down to like 11 or lower for a buy opportunity. And then the NASDAQ, same thing. If this gets down to like 10 or 11, showing only about 10% of stocks are above the 50-day, I'm going to look for a buy opportunity. This has been a pretty good timing indicator for as long as I can look back, like, go back freaking 30 years. Costco. Maybe some dollar cost averaging on Costco. Nothing right now. Walmart, I bought some shares. Walmart's actually up. I think Walmart's a good one for some consumer defensive. Even though it's had like a crazy bull market. Like Walmart should not have gone up 100 and some percent like it did last year. But it did. And I just wonder if we're going to consolidate on Walmart or if we still end up pulling back. I mean, there is a decent bar count where maybe we just go sideways. But last time we tested the 200 moving average was about 256 bars. But anyway, it's part of the portfolio. I just put in a collar trade. I bought the shares. Break even is $90.88. So I'm up a few bucks on Walmart right now. Nike, sitting back down towards the lows. I have some puts in on Nike. I think they're in the 60s. Nike is right here. Yeah, $65 and $60 cash secured puts. That's fine. I'll own some Nike if that's assigned. Otherwise, it's just some income. Home Depot. If the home buyer is getting broken, if home projects are pausing, or I don't know. The trades I took on MasterCard and Visa worked out really nicely. Those were bear put spreads. Johnson & Johnson, I did a roll. I rolled it all the way down to 135 and 130 and kept the income there. Progressive heading lower. I have a trade on Progressive. I didn't put it on my chart. PGR. I have a 230 by 225. Okay, so I have a 230. This is a 221 expiration. 230 by 225 ratio spread. And that would be 217.35 break even if assigned. Chubb, that's insured. Oh, baby. This is one of Berkshire's darlings. I wonder if this is why Berkshire's down with the position they took in Chubb. Like, what the hell happened here? That's a big drop. Maintain and outperform. Insurers fall. Oh, there you go. Your LA fires. Wow. I wonder if this is dragging Berkshire down. Now, the good thing is, like, I talked about wanting to own this thing at like 232. I don't have the option chain that I would like to see on CB, though. So the IV is really high, which is great, but the option chain is a little sparse. I don't have a lot of filled expirations. So I could go out to, February or May if I was willing to own some Chubb. 230 would not be bad. What would be this discount? If I could own this at 23% off, that's not too bad, obviously. How ugly does this get? I mean, nobody knows, right? There's always risk. So, I mean, could this thing just be like, it's been a bull market since 2020? How resilient is CB? Let me take a look fundamentally before I just start throwing trades at it. I mean, fundamentally, it looks pretty darn good. Probably high. I mean, it's not super high in the price to earnings, price to sales. That's good. Okay. I mean, just at a glance, like, it does look pretty solid. Now, would I be interested in like a 230 to 220 ownership price? I think I would be okay with that. Premiums are a little bit better here. If I did like a 225 by 220, that's on the low end of the expected move. Let me put a ratio spread here. So there's an 88% chance of profit, about a 15 to 16% chance of assignment. Income wise, I get $260. This is out 126 days. This also goes through earnings, which is in January. Or I could just do a credit spread. Let me see. If I do a credit spread and I want to get an at the money, I'd rather play a ratio spread. I'd rather take my chances on the income first. So if I go out to May, 225 by 220, that assignment would be, so I get 260 in income. That's a pretty good trade. So 220 is the assignment, -5, minus 2.60. I'd own CB at 212.40. 212.40 off the recent highs would be about a 30% discount. I like that trade. Probability of profit, 88%. There's still about, like I said, a 14 to 15% chance of assignment. It is a good income trade. I think it's good for ratio. Let me see if I can get a 225 by 20 by 15. So now it's a 91% chance of profit, a little bit less income. Ownership price would be cheaper, I think. 215 minus 5 minus $1.90, 208 break even. Chance of assignment now is about 12 to 13%. For an at the money, I mean, I don't love the option chain. I'd like to see this filled in a little bit more. But for 40 days out, it's an okay premium. It's not great. I get like $8 to $10 for an at the money. So it's doable, but this would have to be like, if I was assigned, I'd have to collar this thing and be pretty patient, but this should be a fairly resilient stock. So do I like this trade for the 111 or do I like it for the ratio spread? There's income on the ratio spread. Buy power on the 111 is pretty cheap. All right, I can get over two. I'm going to do this over. If I get $2 for it, I'm going to take the trade. 205. I'm trying to get filled for at least $2. $205 not filling. All right, let's try to penny this thing down to $2. If I don't get filled for $2, I'm not going to take the trade. 201 got filled. All right. Next account. 201 getting filled. All right, so I got filled at 201. All right, new trade. CB. So 111 trade. I'm doing a 5/16 expiration. Buy the 225 put. Sell the 220 put. Sell the 215 put. Collected 2.01 credit. 91% chance of profit. And willing to own. And the break-even price on ownership would be 208, I think. 215 assignment minus 5 minus 2.01 would be 207.99. Okay, so it's income first, assignment second, repair third. I would be comfortable assigning, or I'd be comfortable, like, if I got assigned, having the cash to get assigned and take on the trade. All right, so I'll add in coin and CB for new trades today in the Pulver alerts. I'll add that into the Discord channel. Let me add this in here. So a 220, 225. So 225 by 215. There. So this is a May expiration. 225 buy put. 220 sell put. 215 sell put. 201 credit. Willing to own. And the break even would be 207.99. All right. So there's my trade. Take a screenshot. All right. Not too shabby. What else? Palantir, 65 and change. This thing's dropping like a rock. I've got a ratio spread on Palantir. I'd love to scoop up some Palantir here. This is out to April. Let me see here. I'm only doing one ratio spread. Let me see if Palantir is getting better on the IV. So I went out to April, and I've got the 49 by 48. That's a ratio spread. If I go out to May, now they're $5 wide, but I could do like the 50 by 45. 55 by 50. That's not bad. What I collect on this one, $1.41. $1.41 credit. If I was getting assigned on this, it'd be $50 minus 5. Probability assignment, it's a little bit higher. This is like a potentially 20% chance of assignment, which I don't mind. But this is coming back to like fair market value, right? Like everyone's thinking like Palantir was like the best freaking stock last year. It was nuts. Still, it's just, I know it's really expensive on price to sales, but man, that's insane actually. That's the one thing that makes me a little worried is like fair market value, but I would be owning it pretty much at fair market value, which isn't bad. I just don't know. It's like, why isn't it valued for more profit based on a discounted cash flow model? I don't know. Is this a stock that I should be trading? I don't think it's awful. Yeah, I'm gonna take this trade. So a 55 by 50, another ratio spread in Palantir. I'll throw this in and then I'll wrap it up. I'm grinding all morning. So everyone good? I know I haven't done like requests and I haven't gone through my top down, but you know, when you catch me in sessions like this, it's like I'm trading. So if you like it, you can trade with me. If you don't, keep asking questions. I'll get to the chat. All right, so I'm going to do a 55 by 50 out to May. It's a nice little income trade, hopefully for like $1.90 gets filled. So let me see if I go down a strike. So if I do the 50 by 45, I'm still grabbing some income, but less. If I did this as a ratio spread, what? I get $1.87. Okay, this is actually a better trade. This is crazy. If I do a 45 by 44, I get $1.87, $1.88 of income with about a 13% chance of assignment. I'm going to take this trade instead. So rather than, I mean, this was okay for income, but this one is a lot tighter. So I can still get a decent income trade, good probability of profit. I'd like this to be a little bit higher, but it's about right. I mean, it should be, realistically, this should be like a 86 to 87% chance of profit based on these deltas. This says 82, but whatever. I still like to trade. If I get filled for like $1.85, $1.80 is fine. I'm going to take this trade. So this is a 45 by 44 ratio spread. It's a put ratio spread. So I'm buying the 45 for one contract, selling the 44 for two contracts, willing to take on the assignment. Okay. All right. So let me see what I get filled on for this one. Palantir looks pretty good. Buying power wise, I can get this for most of my clients. I think everyone's got some cash in here to take some Palantir with me. All right. Cool. I like this trade. Palantir. All right, this one's going to go in everyone's account. First, let me find out where I get filled. $1.85. Easy peasy. All right, $1.85 got filled. Now, everybody gets in on the action. $1.85. Okay, right there. Okay, last account. Good. All right, Palantir. May 16. Buy the 45 put. Sell the 44 put. So it's ratio spread. I got filled for $1.86 credit. About a 13% chance of assignment. Got an 80% pop on this one for probability of profit. If I own it, willing to own. Break-even price on that chunk of shares would be 44 minus $1 minus $1.86. I'd own the shares at 41.14. Okay. So 5/16 expiration, 5/45, sell 44, $1.86 credit. All right, screenshot updated, and I'll get all those posted in the A1 Trading Discord for pulver alerts. Okay, before I go, take a look at currency strength. Big jump in the Japanese yen, big jump in the dollar. There's your non-farm payroll reaction. I'm getting closer and closer on that Swiss to hit and profit. That'll be nice at 9,200. Hopefully that hits in the next little bit. We have dollar index on the day is still pushing higher to fresh highs in the dollar index. I'm telling you, don't fight this thing. If I wouldn't, I mean, look, if the dollar keeps going higher, I think the US 10-year also goes up. It's not a good thing. Like dollar getting stronger is not a good thing. US 10-year going up, not a good thing. But that seems to be the trend that is not stopping. So I'm not going to sit around and beg for it to go down. It's like I'd love the 10-year to go down. As a soon to be homeowner out here in Utah, it's like, yeah, I don't want to buy it freaking 7% or higher. So I'd like to see something happen where like Q1 there's a little bit of a reality check. Where do we get on the overall indexes? I mean, we're not that far away from all-time highs. Even with today's little sell-off, we're not that far away from all-time highs. Here's SPX on the day. Do we test the low of the day and just bounce back off it? Do we go slightly lower for the day and bounce back off it? We'll find out. This support level is still really important to watch for next week's trading. We have all the inflation data coming out next week. So is this a break? A break and then a snap back in it? Or is this like a break where this market's going to continue to flush lower? We're about to find out. But it's already been a pretty big move, right? So, I mean, down 1.7. Qs are back up towards 2%. So as we've been talking in this session right here this morning, we're pretty much right where we started. NASDAQ back down towards the intraday lows, nearing almost 2%. So from the close yesterday to the low today, it was around 2.19. Does it bounce off that level and just be like, an ugly day and non-farm and inflation expectations are a little bit higher from the University of Michigan, that we have actual inflation numbers coming out next week? Let's see what it does. But I've got like I said, my market maker levels on SPX. I'm still watching to see, will they be defended around this 5,800 handle? So if we do come in and like tap the lows, does it like pop back up again? So is it, down in the day, up, down in the day, up, and then next week is, maybe a buying opportunity? I don't know. It's tough to say this is a buying opportunity unless you're looking out a little bit longer. Like horizon wise, I don't think we're looking great in the next few weeks. I think we're still expected to see some corrections. If this market is falling into some key technical levels, which through the holidays it's been holding, but if we break this level here, then there's really not much stopping this thing until we get to the 144, the 200 moving average. My big opportunity would be like, if I could just buy this thing at technical support around 540, I'd say 550 to 540. That's like a no-brainer discount. So keep an eye on it. All right. But dollar's up today. Gold's up today. Oil has made a big jump today. I mean, oil's up 2%. It's fading a little bit. That's actually, it's fading a reasonable amount. So oil continues to be like, I think it's going to go higher. It looks like it wants to go higher, but it's quite volatile. Gold doing its thing. I don't know if we're hitting any all-time highs anytime soon. Bitcoin 93. I still have a measure move to 87.79 zone. I'm looking for some buying opportunities if we have a bit of a correction. And did a roll on MicroStrategy. I'm hanging on tight to NVIDIA right now. Everything I own has collars on it, so I'm protected to the downside. But I'll just keep an eye on those levels. And that's it. So I'll let you go for today. I'll get those trades posted. New trade in Coin, new trade in CB, new trade in Palantir. And then I'll update MicroStrategy if you're in that trade with me as well, with the ownership price on the roll. And we'll keep tabs on those break evens. Okay. All right. Thanks, everybody. Hey, have a good Friday. And have a good weekend. All right. See you. Bye.
Thanks for watching today's A1 Trading Show. We hope you enjoyed, and we're excited for a brand new year of trading with you. If you're new, consider subscribing for daily videos and live streams all year long. Be sure to check out the description below for our latest deals and offers. 2025 is just the beginning of our best year yet. We'll see you tomorrow.